metric within the CPI print at 0.7%. That's the fastest that we've seen as far as food prices moving higher in like 2 years, 2.5 years or so. So there's probably still some concerns around inflationary fears in the future. We're not seeing it in the services side yet, and I think that's probably why you're going to see a little bit of caution. That being said, Bostic, I believe, is actually going to be leaving the Fed here this year in actually about a month or so, if I'm not mistaken. So you also have to take his words with a little bit of a grain of salt. May not have as much of a market impact as it used to.
Okay, I know you talked about some of those exports, particularly when it comes to some of the commodities as well, and that's obviously had to do with some of the prices we've seen with some of the records. Just talk us through, obviously, the pullback we're seeing in the prices across metals this morning, given, of course, the rally we've been seeing earlier in the week. We've got red arrows across the board, all but platinum right now, which is just to the upside, but we're seeing, obviously, copper down almost 2%, as is silver, gold just down around 0.5% right now.
Yeah, I mean, if you look at that price action that we saw last night, silver did make another all-time high, $93.70, and I think it reversed around 8% in a matter of 15, 20 minutes after that. It's just a market that is seeing a lot of volatility. This is more of a FOMO type of trade right now. There is a fundamental catalyst, but it might be getting a little bit stretched here.
Slash ES for the second time off the 200.
$100 before we see any type of meaningful stall within price. Copper itself, if you're looking at a 3-year weekly chart, it is hitting the upper end of a resistance level here. So from a technical standpoint, you could make the case that maybe it does pull back here over the next couple of months as you start seeing and start hearing some commentary about supply potentially hitting the market here when it comes to mining operations, especially the comments coming from Rio Tinto as well as Glencore. They're looking like they're going to be doing a deal and increasing production here. So technically speaking, copper might be at a resistance level, maybe pull back here a tad bit. And silver, that volatility is just going to continue until we see a blow off top. And right now, it doesn't seem like that's the case.
Okay, yes, obviously we are keeping tabs on Rio Tinto and Glencore as well. I mean, it could be the biggest mining company in the world. So obviously we're going to be watching that story play out. KG, thanks so much for your insights today and getting us across some of those key stories and the data this morning that we are tracking as far as moving markets today. Coming up, we've spent plenty of time talking about the power needs for the AI boom, but how can investors take advantage of the upcoming upgrades to the grid? That and more when Morning Trade Live returns.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
It'll be one of them days again.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Looks like it.
Schwab lets you invest and trade on your own.
IWM new high.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
Technical difficulties.
Carl.
Schwab, a modern
Carl.
approach to wealth management.
No politics, no spin.
Woo!
Just the market from open to close and beyond. Streaming 24/7,
Carl.
any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. SanDisk hitting yet another all-time high today as Wall Street attempts to keep up with the memory stocks run. Wells Fargo, Barclays and Benchmark all raising their price targets on the stock today, but only Benchmark has a buy rating. RBC initiated coverage of SanDisk. It's set to perform with a $400 price target. Remember, this was up in triple digits last year. We're up 7.5% right now. So we've got a bit of a TSMC flavour here as we see a nice recovery across these sort of tech-related stocks today. KLA Corp up 8.5% or so. Applied Materials doing a similar thing. We've got SanDisk up 7.2 off the back of some of these calls from the analysts. We've got the losers board looking like this. We've got Boston Scientific down. This seems to be to do with an acquisition there. Eli Lilly is also lower this morning. Board is reporting the FDA delayed decision a weight loss pill to April. And we've also got Coinbase down 3.5%. And this is, of course, coming off the back of withdrawing some support for the Digital Asset Market Clarity Act. Not too happy with the contours of that. So watch this space. Joining us now is Chris Gersh, Chairman and CEO of Ultimus Capital. Thanks so much for your time this morning. Chris, nice to see you there. Obviously, we spend a lot of time talking about the energy needs to power all of this AI. We know that the grid needs a good old upgrade. We know that electricity prices are going up. What's the solution, and how are you thinking about this right now?
Yeah, as many of your listeners know, infrastructure is almost 80 years old now on average across the U.S. And to upgrade that takes decades. The only thing that you can really do right now is deploy batteries. You can deploy those within 6 to 12 months. Interconnect approvals have been moved up. That's been something that the Trump administration has focused on, is streamlining that. And so ultimately, batteries is really the solution and where we're seeing a lot of investment.
Okay, so obviously when you think of batteries, we do think of Tesla because obviously it's in the business of this. It's not traditionally been a big part of the business, but it's certainly gaining some steam now given all the AI needs. Just talk to us about ways to play this theme then.
Yeah, absolutely. Tesla's number one. We use it in our projects across the country, and their warranties are great. They've got that domestic content that is key around those investment tax credits. So Tesla is a great play. It's been somewhat range bound here. Anything above 4.25, we believe is great pricing for Tesla. And Fluence is another company that we have continued to look at.
Talking up Tesla.
Content, and the lithium technology is something that has really been remarkable, and they can deploy those systems very quickly. Department of Defense continues to buy batteries, and we all know that government spending, especially around defense, has been a leader, not a lagger in terms of where the market is going. So these deployable, fast, 500 to 2 megawatt batteries, we're seeing really fly on the shelves, and the wait times, it seems like they finally caught up. So we're looking for a huge spike for second quarter in Tesla from their battery division.
Yeah, it's certainly interesting when it comes to the valuation when you think of Tesla, because everyone is sort of stuck on this debate as to whether it's a car company or a tech company, but obviously it has this energy storage side of the business. And, down in Australia, where I'm from, I mean, you see a lot of houses that have those Tesla batteries. They're collecting the solar, they're putting it onto the grid. So, it is very popular. But away from Tesla, obviously the theme in this market has been one of a degree of rotation out of some of the high-flying tech names into sort of the picks and shovels, what we need to use to build the data centers, what we need to use to obviously power all this stuff, like to your point, with the sort of grid upgrade as well. When you look at some of these industries, the industrials, the materials, very cyclical in nature, but is there a way to play this thing,
no, that took off.
At least for the sort of short to medium term?
Yeah, no, you hit on it, right? Gold rush. It was a picks and shovels, so to speak, and we talk about really, oil refining. It was the in between, and really the transportation that allowed those investors to boom. Not necessarily the oil companies back in the turn of the century. Right now, Elon has all the parts. Even on the AI side, he's invested in the infrastructure, but traditional companies, the Eatons of the world, the ABBs, those transformers, combiner panels, all those things that we need to build these systems, those companies are being called a lot. So I would look at ETT, Eaton, as a really strong play for investors right now.
Yeah, obviously they're not very sexy companies.
Video too.
As some investors have been saying in recent years, the whole AI boom has sort of brought sexy back for the utilities.
Yes, it
particularly,
has.
I mean, big, boring, and beautiful, as Kenny Pulkari likes to call some of these stocks as well. But you know, an interesting way to play this whole theme. But what about? Have you got any thoughts on sort of electricity prices? Because I know there's been a lot of coverage around PJM with, of course, what's been happening over in Virginia with these data centers as well. I mean, my electricity bill over in New Jersey has gone through the roof over the last 12 months. So I'm just wondering, you know, what sort of insight you have on that front. Because, you know, we talk about jobs, we talk about the consumer, we talk about the hip pocket. You know, people are worried about this stuff.
Absolutely. Nationwide, we've seen an average of 42% gain. That's huge, just in the last 2 years. On average, over the 20-year average, I think it was about 3.8% inflation in utility prices. So to have a 40% plus, it has shocked a lot of consumers. And unfortunately, for those residential customers at their homes, as you mentioned it in Australia, here in the US, the investment tax credit for homes being purchased is now gone. So as far as the plays on the electricity side, NextEra and Exelon are huge in that PJM market, where you saw those capacity charges increase by over 800% in the last auction. Huge run up as far as the cost of electricity. That's going to continue. So those utility plays, NextEra and Constellation or Exelon, are fantastic buys.
Okay, good stuff. Thanks for getting us a few names, at least, some opportunities, ways to play this whole theme. Chris Gersh, really appreciate your time today, Chairman and CEO of Ultimus Capital there. Coming up, we will get a closer look at the big picture with the team from Charles Schwab, Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so...
Sometimes, you know...
Next. Try it again?
You could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions.
There's not much going on here for me.
Plus, get 24/7 live help and access support by phone, email.
That'd have been a good trade right there if I'd have caught them 3 black crows.
Trade brilliantly with Schwab.
Or that double bottom.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
It is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
We're having technical difficulties.
Schwab.
Schwab, a modern approach to wealth management.
Hey, Dad, I have a question for you.
Oh, God, no.
When did Granddad first start investing?
Oh, too late. Why did Granddad stop sleeping with me, Dad?
The torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two
Tesla taking off.
Planning for their college educations. Someday it'll be their turn.
We're back on Morning Trade Live. We're watching sports betting stocks this morning after Wells Fargo upgraded DraftKings and downgraded Flutter Entertainment, the parent company of FanDuel. The analyst remains upbeat on long-term dynamics in the sector, but believes DraftKings offers a better near-term upside with expectations of a strong Q4 earnings report. DraftKings is down 8% over the last 12 months. We are seeing both stocks going in opposite directions this morning. Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in the team from Charles Schwab. We've got Mike Townsend, Managing Director, Legislative Regulatory Affairs, joining us now. Thanks so much for joining us today, Mike. You know, obviously the last time since we talked, it's been drinking from a fire hose with just the barrage of updates around, you know, obviously economic policy and everything from oil to defence to housing, affordability. But obviously the big one that we were tracking this week was the Powell probe. I'm just wondering what you're hearing down there about how people are feeling about this. Obviously we had Goolsbee out this morning talking about infringing on Fed independence leads to higher inflation. That's not good. Just talk us through it.
Yeah, Sam, great to see you. And you're absolutely right. It feels like we've had about 2 months worth of news in 2 weeks here to start the year. But I think the thing that is dominating Washington discussions this week is the Fed probe of Jerome Powell, the criminal investigation of Powell. And I don't think this has played out the way the administration thought it might. There has been a lot of pushback, and that pushback has come from both sides of the aisle. There's really been a lot of concern about the direct hit maybe on Fed independence here. And you've seen Republican senators come out and say, you know, we're not going to support any nominee for the Fed until this situation is resolved. That was Tom Tillis, who's a Republican senator from North Carolina, who sits on the Senate Banking Committee, said that. Other members of the Senate have kind of echoed that sentiment. So I think there's been a lot of concern that this is an overreach by the administration. And you know, we're going to see how it plays out, obviously, but there's been, you know, pushback from global central bankers, pushback from former Fed chairs. So this has not been played well in Washington so far.
Okay. I'm pleased to say we have Liz Ann Saunders joining the conversation now as well, Chief Investment Strategist, Schwab Centre for Financial Research. Very good morning to you, Liz Ann. Nice of you to join us. Look, obviously, we've also been watching the data as well. It seems like that is flowing again at a somewhat normal pace. Net, it looks pretty favourable as far as, you know, the takeaways here. But, you know, no doubt there is a little bit of a mixed picture beneath the surface. Talk us through it, you know, how you're thinking about this and then obviously what it means for the Fed.
Sure, thanks, Sam. Certainly the labor market, you have a lot of cross currents. The data we got out today on claims, unemployment claims, was very positive, under 200,000 on initial claims. And you actually saw a little bit of a downtick in continuing claims. There's still a very wide spread between initial unemployment claims and continuing claims. Of course, continuing claims mean you've lost your job, but you remain on unemployment insurance. And that is one way to think about this kind of disconnect between hiring and firing, kind of low hiring, low firing kind of backdrop. That shows up in the payroll numbers. So fairly anemic payroll numbers, yet at the same time, you've seen a downtick in the unemployment rate. The unemployment rate is also impacted by labor force growth or lack thereof, given the constraints from an immigration standpoint. So this is one of those environments where every economic data point needs to be fine-tooth combed because there are so many cross currents in this very unique economic cycle. But in general, the economic backdrop is at worst stable, if not in pretty decent shape.
And Mike, just getting back to you, and of course Liz Ann can probably speak to this with respect to how the markets have sort of been vacillating with this whole kind of throwing spaghetti at the wall and waiting to see what sticks kind of policy setting at the start of the year. I'm just wondering how you're thinking about that from your perch. You know, particularly when you think about this being obviously a midterm election year, and what you think as far as what you're hearing, what will stick, particularly when you look at some of these more sort of populist type policies with respect to also affordability, which is really at the top of everybody's mind.
Yeah, absolutely, Sam. And you can tell that Republicans are feeling like they need to get on top of this affordability issue. And that's why I think you've seen the White House, as you said, kind of throw a bunch of ideas out there. The thing is, not all of them are resonating well. So, for example, we had the president propose this 10% temporary cap on credit card interest rates. And the feedback from Capitol Hill so far has been pretty negative on that. So I don't know that that's something that's going to move forward. I think you're also hearing that the president is going to put out something on health care. The Republicans' track record on a big health care plan has not been good over the last 10 or 15 years. It's not clear whether something like that will have much chance on Capitol Hill. So I think you're right that there's a little bit of sort of grasping at different ideas and hoping some of them will stick. But so far on Capitol Hill, it's been difficult to kind of get traction on some of these issues.
I was just looking at
obviously we're seeing a nice recovery for tech stocks this morning. Thank you very much, TSMC,
the 6980s.
some of the record numbers and obviously the capex numbers that they're throwing out there for 2026. But
I was watching the 6980s here. Off that 21. And it's already bounced back down now. Here we go, back here at 330 again. And it ran all the way up to $4. So if it holds the 21, I might grab one. If it'll let me have it here, there it is. 320. 285. Didn't hold it. Gee. There's a couple things I needed to do today. I'll just do one of them. $3. We can drop down and hit 69.57 now that we broke below, but it's weak right now. It's not. I don't know if I'd jump in it. Let's see if you get one more knife. And I'm going to go make lunch. Come on, knife. Yeah, 330, I could have probably got a little bit. 280 to 330. 40. $4. Yeah, there it goes. Would have made it. 420. Well, missed that one. That'd been a scalper. Wait for the next one.
Global movers, just the trades that matter. As the bell hits and the markets react in real time, opening bell live at the NYSE, right when it counts.
we're back on Morning Trade Live. Let's take a closer look at Broadcom. The stock fell 4% yesterday after Reuters reported that its software had been banned over in China. Today, shares are higher, though, after an upgrade. More on that in a moment. But looking at the chart, shares are up more than 50% over the last 12 months and nearly 150% higher from the tariff-induced lows of April 2025. We are trading up over 2% right now, $347 and change on Broadcom. So That's the focus of the morning trade. Joining us now for a closer look is Marley Caden. So as we said, we had some China headline risk yesterday, but it looks like TSMC is a tide that lifts all boats today, including Broadcom, on top of this upgrade. Talk us through it today, Marley.
Yes, like you said, yesterday they were under some pressure. We got that Reuters report saying that Chinese companies were not going to be allowed to use software from their VMware-owned company. But today, a positive day, up more than 2% on this upgrade from Wells Fargo. They got upgraded to overweight from equal weight. New price target of $430. That's up from $410. Right now, trading just below $350. So a pretty significant upside there. The firm said that they believe any concerns about Broadcom's gross margin issues are overdone. And they also say that they see Google's CPU upside plus significant additional custom XPU ramps, scale out and scale up networking momentum. They're saying that this recent pullback we've seen in Broadcom shares also provides a good opportunity here, coupled with increasing confidence in potentially meaningful incremental catalysts through 26 as reasons for their positive outlook. As they think 26 now has a positive outlook, they've revised their estimates to reflect higher projections for Broadcom's AI conductor semi revenue. They've also maintained their outlook for their non-AI semiconductor revenue. They're forecasting low double-digit year-over-year growth for their infrastructure segment in 26. And this is a pretty significant move. When we look at Broadcom, it is overwhelmingly bullish sentiment. When I went and looked across all the analysts who cover Broadcom, 95% of them, Sam, have a buy rating here. Only 5% have a hold rating. There are 0 analysts who cover this company that currently have a sell rating. So Wells Fargo has just hopped onto the bandwagon of everyone who's a Broadcom bull, specifically citing some of this recent pullback that we've seen.
Okay, good to know. Thanks so much for getting us across that note this morning. We are trading higher by over 2% right now. Thanks, Marley. I'll talk to you a bit later on. Let's trade it now with Dan Deming from KKM Financial. Very good morning to you, Dan. How are you approaching your example trade this morning for Broadcom?
Well, yeah, as Marley pointed out, there is overwhelming support for this stock. And I think that looking at the trends, you'd have to still stay with the trend in this stock. But I'm not overly in a belief right at this moment that we're going to see, just a significant upside without potentially a little bit more of sideways to lower price action before we find that upward momentum. So today's trade example is to capture if upside momentum, but if we see some weakness, to have the opportunity to get put in the stock at a better level. So I'm looking at the trade example today to buy the February 353.90 call spread, 353.90 call spread, and then selling the 320.280 put spread. You can do that for about $6.75. Allows you to capture upside above 356 to up to 390 if we do see further upside over the next month. But if we see some weakness, it gives you a little bit of a buffer zone, and then you have the opportunity to get put in the stock closer to 325 if we see some weakness. So again, capturing upside if it continues, but having the opportunity to get put in the stock at a better level, other than outright buying the stock at these current price levels.
Okay, good stuff. I just wanted to overall take on the markets today. Obviously, we're tracking a lot of earnings. We've had some data out today. Getting a nice lift from TSMC. Obviously, that perhaps is being factored into what we're seeing in Broadcom as well. As I mentioned, a lot of these other chip stocks are rallying today. We even saw it in European markets. But we've also got some nice performance for some of the banks, which is a different story to what we've seen in the last 2 sessions, where the financials have actually been down, even though these banks have beat on the earnings. But a good day for BlackRock, a good day for Goldman, a good day for Morgan Stanley as well. In fact, Larry Fink talking about investing today safer than a year ago. Just wanted your overall thoughts on the market this morning.
Yeah, I mean, today is certainly a catch-up day for the tech sector, as we have experienced some rotation in the last several months, and today you're seeing a little bit of that rotation coming back out of the market, in the sense that you're seeing what was leading the market higher last year catching a bid today based on the TSM earnings. But I think overall, when you look at the broadening of the strength of this market, that's something that is significant. It's building a foundation. When you look at the transportations and the industrials continuing to go to new highs together, certainly that is something that some market participants watch. It's that Dow theory that's out there. It's been out there for over 100 years. So that's something I think is worth pointing at. I think overall, when you look at the price action here, Sam, that I think the market's going to continue to find some further upside. Maybe not in the levels that we did see early last year. I think there'll be a little hesitation here as this rotation continues, but it does appear that the foundation's there. If rates continue to move lower, that I think you'll see the equity markets move higher as we move into the second half of the year.
Yeah, well, it's interesting, particularly when you look at some of the Fed speak this morning as to, when those rate cuts could potentially be coming, particularly if you listen to Bostic talking about, distortions to the data until at least April or May. I mean, this is a Fed that is dependent on the data. So let's wait and see. Really appreciate your insights today, Dan. That is Dan Deming from KKM Financial joining us there. Coming up, we will take a look at TSMC earnings and the sectors on the move this morning, rather, and the headlines moving markets overseas. We'll be right back.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Barnes, coming to you live from the New York Stock Exchange.
Holding up pretty good. That new high.
Markets this morning. I'm joined by Alex Coffey to do just that. And obviously, we're seeing a nice recovery for chip stocks this morning off the back of TSMC's earnings. Talk us through the price action there, Alex.
Yeah, price action broadly when you look at the market today is really, really impressive. 70% of the S&P 500 names are higher on the session. You mentioned semiconductors. You look at the SOX index up over 3%. It's absolutely leading the charge. If you look at the subsectors within the S&P 500 and you pull out the semiconductor and semiconductor equipment subsector of information technology, there's a lot of green on that particular screen, Sam, and a lot of it's due, as you mentioned, to TSMC's blowout earnings, but you're seeing the follow-through on the names that are tied to them from a business standpoint. NVIDIA, Broadcom, AMD, Micron, a lot of these AI winning chip stocks are really powering today's market rally after taking, I would argue, the last several sessions off and really being a drag on the market. So yesterday really wasn't as weak as it seemed. It was just more of a tech-driven sell-off that was sort of a 50-50 split. Well, today, tech joined the party.
Yeah, it certainly did. And I mean, as you say, the S&P equal weight was up yesterday. We saw a nice rotation into other parts of the market out of tech as well. But as KG and I were discussing on Market on Close yesterday, I mean, with that pullback that you mentioned and they're not participating, I mean, we have seen some of the Max 7 actually being considered or near correction territory prior to today's action. I'm just wondering, I mean, I know you look at the technicals very closely. Was this sort of the catalyst? What we heard from TSMC about that eye-watering CapEx number, for, you know, people to sort of step in here and help lift things?
Yeah, I think it could be just that, Sam. And the reason being is it's sort of become a trend when you look back over time. When we actually hear from these companies, you usually leave those either news headlines or conference calls or analyst days or earnings results, and the market feels more confident that the AI trade is still, in many ways, accelerating, if not at least holding where it is. It's in the quiet periods that the bubble fears and the concerns around the sustainability tend to take over. So I'm not surprised that that kind of quiet period from the holiday season into the early parts of this new year, some of those fears started to pick back up. But now TSMC was able to kind of reset those expectations. We'll get, AMD at the end of the month. We'll get NVIDIA a few weeks after that. We'll get Micron towards the end of the earnings. So you have these sort of events. And oh, by the way, we have all the rest of the Magnificent Seven in the next couple weeks too, to kind of give us an idea of how much spending is actually taking place and how much progress on some of these projects we're seeing.
Yeah, and then obviously the other thing that we're keeping an eye on is some of the China headline risk associated with what we saw in the performance yesterday. Just wanted to get your thoughts on what you were thinking about as far as the financials today, because a little bit of a different story to what we've seen in the last two sessions, particularly in reaction to some of the earnings. Obviously a nice, strong asset and wealth management numbers out of Goldman. Morgan Stanley also a beat. We got some record equity trading out of Goldman as well. I'm just wondering, as far as the reaction today, yeah, it's just a different picture. It looks like some of the credit card worries, some of the worries around the Power Pro, the criminal investigation has sort of been just put to the side for now, at least for the financials.
Yeah, I completely echo that sentiment. It does seem like some of those fears around Washington have dissipated for now, at the very least, and then at some point when these names have gone on 2, 3, 4-day slides in some cases, or even longer, some of it's priced in. And so despite the fact that Goldman did miss on sales, it wasn't enough to take the stock down. A very different, I think, reaction than what we saw maybe early in the week to JP Morgan. I would say JP Morgan maybe has the biggest impact, but Goldman and Morgan Stanley, as well as BlackRock, did their best to kind of moderate some of those losses today, and it's a really nice bounce back for financials as well.
Yeah, it certainly is. That's what we're seeing as far as the sectors are concerned. We're up 1% right now on financials. Thanks so much, Alex, for breaking that all down for us. Let's check out the reaction and the action in global markets. Now, the UK economy returning to growth in November thanks to the normalisation of production over at Jaguar Land Rover, which had been hit by a cyber attack. GDP expanding 0.3%. That was better than the 0.1% that had been expected by economists. That marked the strongest growth since June after falling 0.1% in October. The pound strengthening against the dollar in reaction, while short-dated British government bond yields ticked higher. And it was another record session for South Korean stocks in mixed Asian trade overnight. The benchmark Kospi jumping over 1.5%, helped by shares in tech heavyweights, you guessed it, Samsung, which rose over 2%, and SK Hynix. The South Korean won, slipping against the dollar after the country's central bank held
there it is right there.
as widely expected. Authorities are keeping tabs on the weakening currency there. Meanwhile, the Japanese yen recovering from an 18-month low against the greenback after some official jawboning there. The finance minister issuing a verbal warning on the currency.
200.
There has not been any intervention.
On /ES.
Shares in Trip.com plummeting over at 20% in Hong Kong trade. It was
NVIDIA. Right now we're talking about SPX. So let's see here. What time is it? Still got time, I think, but market acting a little funny. It didn't hold there. So we got the VWAP coming up right now here. This might be a little risky. $230 off the VWAP. 230. You got to hold. Nope, 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 nope. Could have added a couple more there at 230. Maybe 225. I'm not that confident. Dar. Nope. I think I'll stop out of this one, not mess around. We're at 275. No, I couldn't have got out of it there. See, right now you're on that. We're looking at the chart on the right. That's your VWAP on the /ES. That's what I'm taking this SPX trade off of. I got 260. Would have been nice if we were if we were above the 9, above the VWAP.
Power at an increasingly more effective rate. So they're also focused on their distribution railroad. They have a very, very good approach to understanding the entire ecosystem, and having their now influence in those areas, I think, is a very bullish sign for TSMC.
Oh.
Yeah, obviously the investments, particularly in Phoenix, have been very much a big part of the story, particularly as we look at, trying to de-risk, obviously as part of the whole onshoring effort. I know that the Taiwanese officials are obviously trying to speak to the US officials right now about getting that trade pact sorted, so hopefully we might hear about some more investments there. But as far as what we're seeing today in the reaction to what we've heard from TSMC, I mean, it's certainly given us the green light to resume this rally in tech stocks. I suppose the big question in the market right now is, have they set the bar really high now, and can it last?
Well, they have, and I think it's important for tech companies to do that, because the capacity is there for that growth, and you need to set the bar high to achieve those numbers. And this is a company not afraid to move that bar when they see the opportunity. So I think it's about having the institutional fortitude, certainly that GEA region, having the kind of safe, secure environment that they enjoy today, and having such a tremendous pool. I mean, here in Pennsylvania, Penn State is heavily recruited for these jobs. And when you look at the impact for Americans and for our youth and for these technology sectors, to have such a great draw These are interesting projects. They have interesting outcome. And when you insert these semiconductors into products, we're getting incredible throughput. We're getting incredible output. We're almost quantum and about to take that leap in high-performance computing. And this is driven largely by this kernel, this
good wording, my friend.
Seed, which is powering
quantum
all of
leap,
and it's really interesting space to be involved with. And you can see this ravenous appetite being indicative of growth in America, which is just fantastic.
Certainly is. We're seeing the reaction today in the stock market. Nathaniel,
Nvidia.
Appreciate it. Thanks so much for getting us across your thoughts on TSMC this morning in the broader chip space. Nathaniel Bradley, CEO of DataVault AI. Thanks so much. Let's trade it now with Tom White, host of Fast Market, and TSMC in the spotlight today. An example trade for us. What's the approach there, Tom?
Well, maybe a little bit more conservative, just due to the fact that the stock has rallied to all-time highs after another great report. And remember, capacity is going to be an issue for them because their new plants aren't open here in the U.S. yet. And NVIDIA, AVGO, Broadcom, they're knocking on TSM's door to kind of increase production. And they can't do it at this point.
Back to even.
Capacity constraints. So that might be maybe a headwind. So I looked at a strategy. If you're still bullish in this name, you feel like maybe you missed the rally.
Nope.
The strategy is using the option market.
Didn't miss
this
it.
is a high-priced stock, right?
we missed that one.
$337 per share. That you can take advantage of maybe
TSM.
some consolidation, maybe a move higher, or maybe even a move a little bit lower before you start getting hurt on a strategy like this. So I went out to the February 6th weekly cycle, so just 22 days to expiration, really short-term positioning. And I'm going to look at selling a neutral to bullish.
I'm going to finish my bowl of soup.
That gives myself a little bit of room to the downside before I start getting hurt.
Let's break the number
maybe
9.
The overall market falls, or maybe there's some profit taking here. Selling the 335 put, that's out of the money on the downside by about $12.
That's twice I could have added on to this thing. And see, I got 3 at 230. Like at the 190, I would have added on maybe 6. See, we're still bearish because we're under the 9. And we're squeezing between the VWAP and the 9 on the /ES. Something's going to happen here real soon, so be ready. Oh, God, look at that. I'll get ready to push it. See if we're going to break that 63, and then boom. One tick. Don't ever let stocks get in your dreams. There you go. Now we're doing it. Yeah, if I'd have bought that dip, and let's just say at $2, times 30, times 6, 180, plus 90, so that'd be up to 270. Do you understand? Okay. Oh, 3-9. Uh-oh! Hello, my name's Andy May. I'm your next door neighbor across the street, one with the shiny Christmas lights. I'm sitting over here with Merle, It's my old boyfriend from back in high school, back in 1935. And we were watching you took this trade, this here 69.80, and you were talking smack. And you never did mention the fact that you crossed the 9 right here with a hammer, you idiot. Sit. How dare you? Oh man, I wish I'd have caught that. I would have went ahead and added for sure. Right now I'd be up $1,000 or more. No. Okay, calm down, Jim. We talked about this hammer yesterday. Did we not? Why didn't I not see that? $4.20. Come on, man. Jim, you're the best trader I've ever met in my entire life. Life. At $4.10. I gotta take care of some personal business, man. I'll be back. You know what I'm saying? Anybody want to give me a grade, Sheba? I think that was beautiful. I think that was just beautiful. That's the way you want to do it. Then you're done. If you're a rookie, you walk away. You go home, you brag to all your friends. So yeah, man, there's this I think a dude here on YouTube named Washboardjim. He eats chicken soup, and today he's having dumplings. And he's sitting here munching out and called this trade off the VWAP off the SLAF ES. People in the room were laughing at him. This ain't the only time I've seen these people laugh at this Washboardjim. He ended up showing them up, you know what I'm saying? Boom, baby. $4.60. Unbelievable. Yeah, 69.80s at 460. What are you talking about, nigga? $69.80s. Take it back. Both of you. I'll be right back. Oh, $5. Man, that was good. That was a good lunch. Oh. Well, I'm done for the day. I waited and look what happened.
Bottom lines, nice higher. Earnings per share $2.68 is well ahead of both last year's $2.22 and the consensus estimates around $2.41. Net earnings increased 18% year over year. Its debt underwriting revenue jumped 93% in the fourth quarter, way ahead of expectations. Its total investment banking fees reached $2.41 billion, which is almost a 50% growth year over year at 47%. And as I said, their CEO, Todd Pick, expressed conviction that the investment banking rebound still has a long ways to run. So another name that's only getting better as the day rolls on, over a 5% jump here in real time.
And interesting, to contrast these earnings we're getting today against some of the earnings we've got earlier in this week. Arguably, some of those reports were very strong as well. Goldman, yes, they had some record numbers, but it was, in fact, a mixed report there. What do you think the differentiators are here, Alex? Is it just that it was actually beneficial to be later in the week for this particular earnings period, or was it really in the numbers?
I think a little bit of both, right? So it wasn't necessarily beneficial because in many of these cases they moved lower in sympathy with JP Morgan. So I think JP Morgan set the tone, and then it was like, okay, if JP Morgan is struggling with investment banking, what's that going to mean for Goldman? What's that going to mean for Morgan Stanley? When you started getting some of the more consumer-facing banks, when you get the Wells Fargos, and their numbers are pretty strong. Well, how does that bode for a Morgan Stanley and Goldman that don't really have that much exposure? So some of it's almost like an exhale of like, oh, this is actually a much better picture than was expected maybe 24 hours ago. But all in all this week, still a little bit more of a strong numbers, but maybe not strong enough on the whole.
Yeah, coming off of some very strong momentum in 2025 in financials, though, so a lot of the focus on that. Alex, thank you for breaking down Morgan Stanley and Goldman Sachs for us. That's Alex Coffey, our senior equities contributor here on Schwab Network. I do want to welcome in our next guest joining us, Keith Buchanan, the portfolio manager at Globalt Investments. Keith, good morning to you. We've got a nice day here, a different setup than we've seen this week with all the green across the board. What are some of your takeaways from the action we're seeing this morning?
Sure, and thanks again for having me this morning, Mallory. We're looking at this as coming into 2026 as a little more volatility than we've seen in the last several years. As the market really has to come to terms with what we're seeing from a monetary policy standpoint, fiscally as well as some of the geopolitical issues that might cause a little more volatility this year than we've seen in previous years. So that's what we're really focused on early this year, and we're starting to see earnings season starting to shape up in a fashion that could really paint a picture for substantial, mid-teens earnings growth, what we're expecting over 2026. So that outlines an environment that's positive, but there's still, again, some risks that we see present and clear for this market in 2026.
Keith, you said in the notes that you sent over that you see 2026 as a gap between expectations and reality. What do you mean by that?
Absolutely. As we see the soft landing that we've clamored for, the market has clamored for the past 2 to 3 years, come to fruition, and that expectation of this Goldilocks scenario, we feel like the reality is a lot more complicated. As we see broader expectations and more widespread, expectations on both sides of the ledger of how the Federal Reserve really moves toward monetary policy, as well as fiscal policy really having really really weighing on markets in 2026, as well as we deal with a lot of the digestion of from the fixed income treasury issuance that we've really kind of made the plate for over the past couple of years. And we also see the reality of earnings really come into play as well, and it can actually affect markets in the opposite way, in a positive manner, as we feel like the market should get more broad as some of the earnings growth spreads beyond the AI and AI adjacent names to more industries that are more associated with the real economy. So we feel like the reality could be mixed with expectations. We feel like we'll clash with reality in a way that the market really hasn't grasped with just yet.
All right, so I want to touch on a couple of the points that you made in there. First, let's talk about the Fed. I think this is one of the places where people are starting to point out some gaps between expectations and what the actual reality might look like. What are your Fed expectations for this upcoming meeting and then for the rest of the year?
Sure. For this upcoming meeting, it's baked in the cake, and expectations on for Federal Reserve move is no move, and that's what we expect going forward over the course of the year, for the next 7 meetings after this next meeting, we feel like the cuts and expectations of cuts have been pushed out. And we feel like the consensus is 2 cuts, one in June and also one again in the fall. As we move through the year, we see the risk to more resilient growth and perhaps even inflation that's stickier than we expect over the past couple of months to really kind of keep those expectations moving out to the latter part of the year and how the market really starts to absorb the fact that we're coming to a landing position where monetary policy won't dictate the next moves for our economy and also for markets as well. So we're factoring in monetary policy really moving out of the equation in a way that we really haven't had dictate market moves over the past couple of years. So that's one thing that we feel like it really changed as far as expectations meeting the reality of the soft landing environment we're coming into.
And Keith, if we are in this landing process that you're talking about, you stress that inflation isn't reaccelerating, it's just not falling fast enough. Why is that distinction so important here?
Absolutely, because the precursor for more aggressive hawkish monetary policy is inflation coming very quickly into the target that the Federal Reserve has made, which is 2%, of course. As that slows, we feel like the expectation for cuts could slow, which could pose a risk to some equity valuations that perhaps have baked in a more dovish monetary policy in 2026. So I think it all kind of comes together for a more stubborn growth environment, more stubborn inflation, which could lead and keep the door open for a Federal Reserve that doesn't have to move as quickly. And there's political pressure that's changing, of course, as we kind of see over the past couple of years, and that could also affect some of the expectations for monetary policy as well. But we see monetary policy really moving out of the forefront of what's really dictating a lot of the moves and volatility and risk assets right now.
And in terms of inflation, we've started to see some deflation in terms of goods, but services is still very sticky there. Do you view that as structural? Is that a potential roadblock to your thesis for the year if we don't see meaningful improvement in services inflation?
Sure, most of the services inflation, of course, is housing related, and there's a lag, a stickiness that's natural and structural to your point of some of that data and how it comes to the marketplace. I think the way we look at how the market will digest that incoming data is a little bit of a precursor going forward into the latter half of 2026. Expectation that will continue to move will have to be receiving the data in order for the Federal Reserve to move more aggressively in a hawkish direction. And again, that plays into our thesis that the Federal Reserve may be a little stickier in their presumption of deflationary pressure or disinflationary pressure, as that data will be slow to materialize as far as showing that housing inflation is largely behind us. So that also plays into the thesis we have.
And Keith, let's talk about the equities component here. We saw in 2025 a group of big names sort of leading the charge here. For 2026, do you think we're still going to see a lot of concentration at the top in just a few names, or are we going to see more broadening out?
We feel like we've already started to see that happen. Starting in November, we saw some spreading out of equity gains to parts of the marketplace that really have been left behind. It's called small cap, more value-oriented names, also internationally as well, to a point to where we feel like that it can be either confirmed or rebutted with earnings. We feel like earnings is really going to be what takes, again, expectations to reality of that broadening of equity returns in 2026. So far as earnings season, we've seen some of the value cohorts, specifically the financials, have results that have been positive, but some of the reaction has been mixed. So we're looking at this earnings season as somewhat of a precursor as to how widespread some of the returns can become in 2026, and perhaps even become leadership of the direction the market takes over the course of the year. So we feel like earnings is going to really set the stage for that broadening effect that we hope to see in 2026.
So as earnings sets the stage here, as we broaden out and see more breadth across the leadership here, what traits would you say are going to define the winners this year?
We feel like those that have, and we start to see this in November, those that have earnings sustainability, margin durability, and also the balance sheets that can withstand softness that we feel like has a risk of kind of bubbling up in 2026. Those more resilient, again, not necessarily those that are perhaps even the fastest growing, will stand the test of time over the course of 2026. As again, that volatility could resurface as some of those risks perhaps could come into play over the course of the year. So we're looking at sustainability of margins, earnings growth, as well as cash flow and balance sheet resilience as some of the key factors in what could push stocks going forward.
Keith, we appreciate you being with us for a broad look at 2026 and what we might expect here. That's Keith Buchanan, Portfolio Manager at Globalt Investments. And we've got a lot more for you to come on Trading 360 today. Next, of course, we've got the big three. 3 stocks, 3 charts, and 3 trades for you. Rick Ducat is back to take us through the technicals, and Tammy Marshall will join us to take us through the trades for Next Power, Amazon, and Royal Caribbean. That's next on Trading 360 on Schwab Network.
The most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades to take you through. Rick Ducat will be here to take us through the charts, and here to take us through the trades today is Tammy Marshall, the Fibonacci princess herself, analyst and Elliott Wave trader. Tammy, wonderful to have you with us this morning. You've got a great morning to be with us. I've started every morning this week talking about the mixed picture or the negative picture we're looking at across our major indices, but you've got a nice green setup this morning. What are your thoughts?
Yeah, absolutely. I mean, I'm going to be a bull until I'm not a bull. So all 3 of my setups today are bullish. I did look at sharing a bearish setup. I looked at quite a few different charts, but I just didn't get as much conviction for them as I could for these 3 bullish setups that I was able to find.
All right, we will always take a happy bull Thursday. Let's talk about this first pick. They're having a good morning so far, too. We're talking about Next Power, formerly Next Tracker, ticker NXT, up about 5 1/3% right now. You know, why is this your first play?
Well, I like Next Power because it has defined risk. All of my charts that I'm going to share with you today, are stocks, I should say, charts and stocks, all have defined risk. And I like the fact that it was coming down to the 50 SMA that's correlating with a huge cluster of Fibonacci price support. And I love finding clusters because that means there's a lot of retracements and symmetry is what I call them, that come together in order to form a very strong zone, in addition to the fact that it is correlating with the 50 SMA. And as you said, it has already bounced quite a bit this morning. The original zone is 92 to 94, which you can still use. So what I like about it is that we have earnings that are confirmed for January 27th. There are no weeklies, so we're going to have to go out a little bit further and hold it over earnings. but that'll make it a little bit more aggressive. I have target of 120, my Fibonacci target, which is the 1272 extension of that 14th of November low. I have a call debit spread for February 20th. The strikes are 105 and 120 calls. You are risking 300 to make 1,200 if you only have one contract. Now you can size up depending on the size of your account. Let's see, it's moved just a little bit. Oh, it's already up to $4.50 at this point, but still you could risk $4.50 to make over $1,000.
It sounds like a nice play to make $1,000 there. And you mentioned the earnings period falling within this trade. They're going to have their earnings on January 27th, so within that Feb 20 window. But as we look at the technical setup, I can see this upward moving channel here, Rick. But what is the near-term setup as we move into earnings?
Well, as Tammy said, what we've had is a strong rally followed by a pullback and then a range-bound period here. So we had our highs, 112.74 here. Then we had a pretty pronounced floor that developed around the 84 level, as well as a ceiling around the 93 level. We also had some upside tests that coincided with a previous low point here around 96. That was about where we hit our high. And then we did have the breakout. So now we find ourselves at a situation where we have made a push to the upside. We are holding on above those old highs that the old resistance now becomes new support, but we haven't quite pushed above and made the next step of breaking above those old all-time highs. So for now, 102, that's about where we had our relative highs here. So pretty close to that 105 level, basically looking for just a breakout and a continuation of trend with our example trade there. So if we do look at our moving averages, our closest moving average here, our 5-day EMA, our weekly EMA in blue, lines up with about 97 or so, close to our trend line here. We do have our quarterly EMA. We don't have the 50 SMA on this chart, but the 63-day EMA exhibits something pretty similar here. In general, just showing that pullback to a longer to medium term moving average, and it was a supportive holdout area for the bulls here. So now we can also see RSI has been traveling upward. We kept making new relative highs along with price here, but now we can see that for now just matching our price activity, no notable divergences or anything like that at this time. Our volume profile study that shows the heavy trading areas, one is right here, which lines up with our range bound area, kind of what you would expect, 85 to 90 or so. But right about where we are now here, that's another smaller node near about 100. So if we do get that push beyond the low 100s, that could be the sign that a further breakout could be materializing.
Yeah, and right now, Next Power up even more than when we started talking about it, up now 5.6% at $100 even. Now, Tammy, your next pick here is one that keeps coming up in conversations with guests. Amazon was considered a laggard in the Mag 7 and 25, but a lot of names, it's on a lot of radar for a lot of the guests that we're talking about for 2026. I know you said we're bullish here, but walk us through this pick.
Yeah, Amazon's a party favorite, right? And it is looking better and better here. We have unconfirmed earnings for February 5th. I have a setup for us to run into earnings, and I've got defined risk on Amazon. That's my favorite thing here again about this trade is that the risk correlates with the 50 SMA. That zone, which what I mean by defined risk is the zones that I'm giving you today. If we were to go through those zones and bust them on the downside, then I want you to take the trade off, because it's no longer a good trade, okay? So that's what we want to do, define our risk, keep our losses minimal, keep our winners at maximum profits. So the defined Fibonacci zone of risk is 233 to 36. The first area of resistance that I have on Amazon is around 250, and we previously failed from that resistance on January 12th. So what I wanted to do was set up a broken wing butterfly around that 250 area. The strikes are 240, 250, and 252.5. So the reason why I chose those strikes is because with a broken wing butterfly, you go ahead and if it keeps going, you can win on the upside rather than a regular butterfly where you are trying to pin in the middle. So with the broken wing butterfly, you are risking 250 to make 500 on this Amazon play.
All right, so with Amazon, they are having an update today, up about a percent right now. Not huge moves in 26, though, compared to some other companies we've seen with these massive moves to the upside. As far as our technical setup, Rick, what does it look like here?
Well, 240 and 250, those two strike prices mentioned, those are two of the most important price areas in the near term on this chart. The reason I say that, 240, if you backtrack here, this was around where we had those old highs in this area. That's around where we topped out here. That was a supportive area and resistance several other times here. 249 roughly is our relative highs. So 249, 250, roughly the same area. That would be the breakout point beyond our relative highs and the continuation of this gradually climbing period of lows that we've seen here. So broader picture, a wedge type shape here. Two trend lines converging toward each other with an increasingly narrowing range of activity. I think you could argue that could be what we're seeing here in the shorter term. So look for some horizontal levels to come into focus. If we do start to move further to the downside, 225, 221, and 215 are some notable low points that we saw during our declines. So if we were to look at our moving averages next, we have our 5-day weekly EMA and our 21-day teal monthly EMA prices between those two. So between 236 to 240, those are some short-term areas of interest that traders may be on the lookout for. RSI also showing a pretty similar shape here, just converging toward each other. These situations are often things that traders kind of look for. They may be a little bit boring as price constricts and just kind of bounces around here, but low volatility is often a precursor to higher volatility when you do get that eventual breakout. So look for some kind of big movement beyond either of those two boundaries here. Our volume profile study lines up with these price levels, our point of control down here near 222, 230, and 250 or so are the standout areas from trading activity. Notice as well very heavy activity after our last earnings event here. Usually shows conviction on the part of traders.
Yeah, we're trading right in the middle of that range you just highlighted today, right about 240, just slightly under there. Tammy, your last pick is one of my daughter's favorite companies, so she'll be thrilled. We're talking about Royal Caribbean Cruises. Demand expected to be strong for 2026 in terms of analyst coverage here. Why Royal Caribbean of all the cruise lines?
Well, we have something in common then, because I have 6-year-old and 12-year-old daughters, and they love Royal Caribbean also. We love going on the cruises as a family, so why not, right? We do have unconfirmed earnings of January 27th. This trade that I'm going to give is a little more aggressive, but I do have a Fibonacci zone of risk. The defined risk is 270 to 73, which also includes the 50 SMA. The first resistance level that I have is right around 313, and actually my first target isn't all the way until around 400. So we're going to go for a little further out to April 17th. So that we can not only catch the run into earnings, but we'll also catch the next run into earnings. So two chances to see this rocket back off. We're going to do a simple call debit spread. The calls are 320 and 350. And you are risking 500 to make 2,500.
All right, so as we look at the setup for Royal Caribbean, our only stock in the big three today that is under pressure just today, a very different technical setup than our other two charts.
Yeah, pretty interesting too, because we want to know this travel and leisure demand, is it still strong here? But just to talk to those strikes, 320 and 350. 320 roughly here, these old highs that we saw, roughly a gap as well, 316, I specifically highlighted the gap, but the concept is very similar here about our relative highs. Then 350 is about where we had another gap in notable highs in this area. So basically looking for an upside breakout and then perhaps a potential pause or consolidation around that level. But today's price activity indeed is a bit more toward the downside here. We had a breakout from below our channel that you could draw connecting these lows here. Now we find ourselves near 277 roughly, which is these old lows here before a gap down. And if you were to look backward here, again, a notable high, a gap level, and all the way back here to another high point. So another of these standout price levels, and actually just recently to our relative lows. So if we do break through that level, 245 stands out. Again, lows and a notable gap previously as well. Finally, next, we have our confluence here. Like these types of clusters Tammy referred to, our moving averages are all coinciding on top of each other near about 287 or so. So a breakout beyond that point would be necessary in order to move back into that channel type shape here. So we have our channel and our moving averages converging together at a similar point, giving us one of these confluence areas. RSI on the verge of breaking downward below our trend line here. Not quite really a collapse yet. And notice as well, we are still above our longer term moving average here. So not really a collapse, as I said here, but on the verge of making more of a bearish move. We are below the 50 midline at this point though. The heavy volume areas that stand out are about here near 265, about here near 280, and up here near 310. So those are pretty close to some of our notable lows and price levels that we mentioned here. So definitely an interesting setup.
Yeah, an interesting setup, and as Tammy mentioned, we are expecting earnings from Royal Caribbean at the end of the month. Right now, January 27th is the expectation for those earnings to come out. Thanks to Tammy for being with us, Tammy Marshall from Elliott Wave Trader, and of course Rick for being with us to break down the technicals as always. Coming up next, we're going to spotlight hotels and lodging in 2026. Stay with us for that conversation.
Yeah.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight lodging and hotels. Joining us now to help us do that, Chad Binen, the senior analyst, lodging and theaters at Macquarie U.S. Equity Research. Chad, thank you for being with us today. You know, before we look into 2026, I'd love to start with some of the themes that you noticed emerging in the lodging space in 2025, and if you think they have legs to carry through into 26.
Sure, absolutely. Thanks for having me. Yeah, in 2025, I think there were a lot of mixed signals, obviously a lot of volatility in the consumer demand side of things and also the corporate demand side of things. So generally about 40% of travel into hotels comes from consumers, and we saw, as I mentioned, kind of a K-shaped economy in 25. So that low end, falling off a little bit, but that high end really prioritizing travel and seeking out some of the top destinations that they always wanted to visit. On the corporate side, we did see the impact from tariffs in the first quarter of the year. As corporations started to get more comfortable with where the economy was heading, we did see group travel and traditional business travel start to accelerate. And I'd say in the past few months, and even in the past few weeks, particularly from what we heard from Delta Airlines, it does look like we're starting to see the confluence of this point in the right direction.
I was actually going to bring that up with you. You know, you brought up the K-shaped economy. We are starting to get more confirmation this earnings season from spending at the banks, particularly from Delta, saying they're getting this boost from premium travel. They're actually changing the way they're building out new planes to include more premium travel. They also cited that uptick in corporate travel. As far as how that dynamic plays out across the hotel space in 2026, how do you anticipate that trend continuing or even becoming stronger and accelerating?
Yeah, so the two names that we like in lodging, or I guess how our order stacks up, Hyatt, they have about 70% of their travel skewed towards the two highest end chain scales. So that would be luxury, think 5-star types of properties, and then upper upscale, which are some of the bigger gateway city properties with strong food and beverage options. And then the second one would be Marriott, which is a little bit behind Hyatt. They're just, a bigger company. They're the biggest hotel company in the world, so they have more diversification. Both companies, surprisingly, will have some really good growth in 2026 from credit card spending. So despite what we're hearing on the credit card side of things and a potential cap that could slow down the growth of this, credit card loyalty branding have been really strong drivers for these companies, and we think that higher end luxury company, consumer is choosing these brands for their credit card, their loyalty, and then being able to use those points at, once in a lifetime types of destinations.
I certainly like to use mine. I even thought about opening a credit card that had good points for good hotels, so I get that argument. I see it play out. But in terms of the lower end of the lodging market, do you think that we may see any changes based on some of the tax benefits that we have coming in 2026? Or are we at the end of the year still going to be talking more about this higher end traveler?
We are expecting a slight improvement from that lower end. We're obviously seeing it from economists kind of pick up their GDP estimates for 2026. In my gaming sector, on the land-based side, whether it's regional casinos or Las Vegas, I think those companies are talking about the One Big Beautiful Bill benefits, the extra check that senior citizens will receive, and just more deductions that will help that consumer. So I do expect for some of that to flow through to that consumer, and even that low-end consumer has chosen experiences and travel over goods. So that trend is still our friend for the sector, but for our forecast for 26, we are still expecting negative growth for those low-end tiers.
Okay, so negative growth in the low end, but you like Hyatt and Marriott on the top. As far as the space itself, we have seen, a lot of these lodging stocks now trade at premiums compared to some of their consumer discretionary peers. Do you think the valuations are getting a little bit ahead of the fundamentals in this space?
It's a great question. I think that's one of the reasons why we're not more positive. So what we did in our 2026 outlook is we compared our sector to other franchisors. Whether it's in the restaurant industry, the fitness industry, and historically those companies, the other sectors, traded at a premium to lodging. It's just a great business model. You can scale it pretty fast, really good returns. But what we've seen in the past 2 years is the lodging companies are now trading at a premium to those others. So whether it's Domino's, McDonald's, Planet Fitness, Wingstop, those had always traded at better valuations. Now, I think what investors like is obviously the shift to experiences. Our sector should grow high single digits on the EBITDA side and low double digits on the EPS side. So maybe that is a little bit stronger than some of the other franchisors, but that is probably the one reason that's held us back from a more bullish stock outlook for 26.
And we've talked, mostly domestically. You cited some of the casinos that are here, but as far as international markets, how do they play into your outlook?
Look, I think international inbound, that's about 5% of demand. That has been slow to return. International outbound
not much of a
has
day-to-day.
been positive. So there's been a lot of people here in North America that have traveled to Europe and Asia for their vacations. For 2026 on the consumer side, The benefits will
what
be
they're
World
waiting
Cup,
for.
which is in June and July here in North America, and then secondly, the America's 250. So last year there were probably more events that were bringing people to other markets, whether it was soccer tournaments or the Taylor Swift concerts. I think some of that should bring people here to North America this year. And then obviously, depending on what happens with the US dollar, that could also be a benefit for inbound travel. But we're not really expecting a recovery in our forecast. If that comes in, I think that will be upside to our estimates, and we expect for the lodging companies that report in the next week to kind of have a cautious outlook in terms of international inbound. But yes, overall, it's been positive outside of the U.S.
Well, Chad, we appreciate you taking the time to join us today to talk all things lodging. That's Chad Bynum, Senior Analyst, Lodging and Theaters at Macquarie U.S. Equity Research. Coming up next, we've got the Disruptors. We'll be taking a look at Broadcom today after getting an upgrade from Wells Fargo. We'll have the latest next.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, well,
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters.
A lot of commercials,
Let's head to the New
people.
York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and The Watch List. Good morning to you, Nicole. We've got a nice start to our morning for once. I'm
Yes,
not
we
saying
do.
mixed. We're not looking at red. We're green across the board. What's sticking out to you most this morning?
Yeah, the path seems sort of calm, and never short a dull market. It's interesting because we have a lot of things in catalysts that gave us a bit of a boost. We had been selling, so people are buying back a bit. You had the language from the president and the Trump administration. Doesn't seem that they're intervening in Iran at this point, so it does seem like that story is taking a bit of a break, right? There's always that geopolitical fear. We've gotten in pieces of good news from technology to financials. The technology story for Taiwan Semi really quells all the concerns about the AI bubble. Larry Frank from BlackRock was here, and I'll get to financials in a moment, but he was saying there's no worries about an AI bubble. I mean, you should see the CapEx spend that's expected from Taiwan Semi. They're talking about $52 to $56 billion to spend in order to meet the demand for their AI processors. They handily beat. And so with that, we're seeing Taiwan Semi higher. We're also seeing a name like ASML, a Taiwan Semi customer, that's higher. And just this whole meaningful shift in confidence on many of these tech names that are leading the S&P 500 that come along with analysts' price target raises and upgrades, new calls. Names like Broadcom, KLAC, analog devices.
Way to go, Randy. Way to go.
So that's the big picture there. As far as the financials, you had Morgan Stanley, Goldman Sachs, and BlackRock all coming out with good numbers. The really impressive part was the investment banking, which showed improvement at Morgan Stanley and Goldman Sachs. Hadn't been the same story over at Bank of America and JP Morgan. So the takeaway is people are feeling pretty good today.
Yeah, pretty good today. Also, investors in Dell feeling pretty good. They got an upgrade. We're seeing a move up more than 3.5%. You know, what's behind this upgrade?
Well, you know, the big picture here is Barclays now they have a 148 target. That's unchanged, but they raised it to an overweight from an equal weight, really seeing upside to the future estimates and numbers from Dell. And they're saying the drivers are the server orders, the expanding opportunities in enterprise softwares, server and storage, and that management is very well positioned in order to navigate all this. It's also been reported that Dell is in a shift sort of from old to new, really transitioning what Dell was into what we know Dell to be in the future, and that has been happening for Dell and managing spending. So that's some good news there for Dell as well. So right now, Barclays puts this overweight rating at a 148 target. The stock is at 123 today. Marley?
Some nice upside there. Thanks, Nicole, for breaking all of that down for us and for your insights on the moves we're seeing this morning in the market. That's Nicole Petalides. Now it's time for the disruptors. George Tillis, our senior markets correspondent, is here with today's company. Nicole just mentioned them in her overview. We're talking about Broadcom today, moving to the upside after getting an upgrade at Wells Fargo. You know, what's behind that analyst move, George?
Yeah, obviously there's some good movement today, or prod movement in the chip space based on what Taiwan Semiconductor reported, and that's again creating some sympathy moves on a lot of the names like Broadcom, which is really one of these companies that is focused on targeted networking solutions in the semiconductor space. Their XPU technologies are really integral in terms of blending GPUs and CPUs across mainframes, data centers, and of course networking and communications. Some of the challenges, if you look at Broadcom, especially since December's report, in terms of earnings, were some margin compression based on competition in the chip space. Google and their TPU technologies. The other thing is Broadcom's exposure in China is still around 20%, and there's a lot of competition in that realm of the world from companies like Huawei. But nonetheless, if you look at Wells Fargo, they're actually seeing this as potentially an opportunity in Broadcom, considering right now that they see the gross margin compression that the company reported last quarter back in December may be overdone at this point in time. They raised their price target to $430 from $410. They still see a continuation of the XPU ramp going forward. They also see scalable aspects to their core business moving forward, especially when it comes down to networking and security systems. But nonetheless, if you look at Broadcom, it's had a great year overall, up 54%. But one of the things is it's still down off of its December 11th highs by about 17%.
So with that setup, George, and knowing that Wells Fargo at least sees 20% plus upside here with their new price target, how would you go about approaching trading this for example purposes?
So this is going to be similar to AMD's trade. We talked about AMD, and one of the challenges is it wasn't trading it back above its 50-day moving average. It did reclaim that today. So in this case, I'm going to put on a structured trade much like that one, which is a put spread. Because if you look at Broadcom, irrespective of today's nice move, it's still finding some resistance at the 50-day moving average. If it doesn't reclaim that, I'm not going to place an aggressively bullish trade, but I'm going to structure a put spread which is mildly bullish to neutral, if that. So what we're going to do is go out to the February's contract. I'm going to sell the 330 put, and then below that I'm going to sell buy the 320 put to offset the risk. And so altogether you can earn around $3 a share or $300 a contract. So the whole premise behind the trade is at least to hold the 330 level between now and expiration, which is in 36 days. You earn $3 if that's the case. And then, of course, your break even, if it does break below that level, is $327. And then, of course, you have to consider the risk, which is $7 a share, and that only occurs if the stock gets $320 or lower by expiration. So it's bullish, but it also gives us flexibility just in case there is some additional pullback in the name, considering, again, like I said, it's been drifting down since its reported earnings back in December.
Yeah, we'd have to move down, 7+% to get down to those 320 levels that you were talking about there, George. Thanks so much for breaking that down for us for the note and also the example trade there. That's George Tillis. Coming up next, we've got our 360 round. We'll be talking all things Taiwan Semi after their earnings report. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey,
Even Meta after
I have a
yesterday.
question for you.
Sure.
When did Granddad first start investing?
No.
Granddad had an account with Schwab before there were branches in the
Granddad.
area. He really started with nothing. He worked hard, and after he passed away, the
Pervert.
torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
Options to earnings to volatility plays. We bring decades of trading
About to take a
experience
nap.
every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at
I'll be
noon
right back.
Eastern, live on Schwab Network at schwabnetwork.com.
Slashy S looks good.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round.
Okay.
For that, let's bring in our panel to discuss Taiwan Semi after their earnings report early this morning. Joining us now, Kim Forrest, founder and chief investment officer at Boca Capital Partners, and Ben Bajarin, the CEO and principal analyst at Creative Strategies. Thank you both for joining us today. Kim, let's start with you. What are some of your major takeaways from the report we got from Taiwan Semi?
So this is my bias. Well, I think it's really interesting when companies report earnings, they're telling you about the past. I'm more concerned about the future.
Yes.
And Taiwan Semi, no doubt, had a great quarter. But what I really am on fire about is they're increasing capital expenditures by 40%. And that should put to rest any concerns that the AI spending is a bubble. And I mean, this is a company who lives and dies by making sure they have the right capacity, not too much, not too little, and it's a 40% increase. That's my big takeaway.
All right, and Ben, same question to you. What were your takeaways? And also, do you agree with Kim's thought that this sort of puts to rest for now this conversation about an AI bubble?
Yeah, absolutely. I think, this is an extremely bullish signal, and you're going to see this again throughout the industry as companies seek to spend more to capitalize on really what is a monumental moment for this industry in build out. I think, TSMC's gross margins are still one of the most interesting things that is really unprecedented for a foundry. Again, if you look at traditional economics, historically, that has not been a high margin business. So it's interesting to see that it was a record gross margin. They've had quarters in the 60s before, but a record gross margin, which again, just doubles down on they can directly map CapEx spend to gross margins. And then the dollar shift to HPC and cloud AI, I think, is one of the most significant things as well. Those are more chips per wafer. Those are more expensive wafers, much higher margin products. So as you see the share of HPC as a percentage of their revenue, and then again, the share nodes from leading edge being 3 nanometer, 2 nanometer and beyond, just continue to capitalize and increase their margins. It's just a very good signal and a long kind of bullish trend for TSMC.
I'm going to come back to margins with you in a moment, Ben, but Kim, I want to talk about this CapEx spend. What does Taiwan Semi's willingness to spend north of $50 billion say about what it's seeing from its customers outside of NVIDIA?
Sure. Well, I think our thoughts all along on AI in particular, while it's interesting that we're going to build all these data centers, I also think that there's a lot of compute that happens away from the data centers and out in the world. And I think that also can benefit, well, everybody that makes a semiconductor, but also Taiwan Semi. And I think they know that, and that the demand for more compute power, whether it's at the data center or out at the nodes, it is big, and they are putting their money where their mouth is.
They are.
And Ben, coming back to this gross margins conversation, we saw those hit records. They're guiding for even more expansion there. How much of that is part of the structural shift to AI and HPC versus cyclical tight supply?
Yeah, I mean, it's all of it. It's largely, again, these are larger, dies per wafer. They can charge more per wafer. While, again, we have to note that each new node jump does cost more, right, in CapEx. So as they move to N2 and beyond, right, that is more expensive, but they're monetizing that at a very meaningful way. And I think this is not a trend that's going to go away. Each node has been bigger. If you just look at, and I've covered this company for, almost 20 years, there's always been a debate as to, can they really monetize the next node shift, or is the next node going to be bigger than the last one? And this has historically been true since 7 nanometer, 5, 3, 2 will be bigger than 3. And it's because there's more complexity. The CoWoS capacity that they're up against, that's again another factor. CoWoS wafers are again another revenue stream in terms of advanced packaging. So across the board, within the semiconductor industry and the way that we see designs for AI and HPC, TSMC is at the heart of that, and this is just to continue to be a growth trend for them across all vectors.
And Kim, as I'm looking at the numbers, HPC is now more than half of the revenue for this company. How durable do you think this margin profile is as they ramp capacity?
Well, as the analyst that just explained this, the smaller things get, the more expensive they are. And I think that not only is it just higher tech, we're looking for speed with energy conservation. So putting those, making the chips do that calls for, the smaller nanometer chips. And so I think that should allow margins to hold up, because we want better, faster, stronger, and by the way, ultimately less energy through these chips.
And Ben, with those 2 nanometer chips ramping, how wide do you view their moat right now?
I mean, again, it's pretty significant. I think, coming into this, we have known that there is more demand than TSMC has capacity by magnitudes of maybe 20-25%, possibly more. They're not going to be able to meet capacity for the foreseeable future, which to a degree, I believe, opens up opportunities for the likes of Intel and Samsung. But again, and TSMC is going to remain to have the vast majority of that, both their scale, their support, the tight integration with the ecosystem, which is not just, again, from the likes of NVIDIA or AMD. It's also Broadcom, so everybody making custom ASICs is similarly trying to jump on the leading edge node. So they will remain capacity constrained, and they will continue to see demand for new nodes, not just 3 but 2 and beyond, outstrip supply. Again, for the foreseeable future.
And Kim, last question to you. Do you view 2026 as what's going to be another breakout year for AI servers? And a follow up to that, do you still view Taiwan Semi as one of the cleanest ways to play this theme?
Well, I've liked semiconductors in general, but if you really want to generalize, go to instead of is it NVIDIA, is it AMD, is it somebody else, Broadcom, go to the people that make the chips. And if you want to go further downstream, maybe look at ASML, which are the people that make the chip making equipment. Because everybody has to use it. And that's kind of the takeaway here. Taiwan Semi, everybody has to use it.
Well, we appreciate you both being with us to walk through those earnings. Taiwan Semi moving up about 6.75% so far this morning on the heels of their earnings.
Damn.
That's Kim Forrest, founder and chief investment officer at Boca Capital Partners, and Ben Bajarin, CEO and principal analyst at Creative Strategies. I also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7.
We've been overdone, ain't it, baby?
I'll be back with Market on Close at 3 Eastern, 2 Central, but stay with us. Fast Market with Diane King Hall is coming up next.
It's a little overdone, Marley. Yes or no?
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download
Thank you very
the
much.
Schwab
It
Network
is a special
app
commercial
and
about me.
stream live coverage wherever you
Jim.
are.
Jim's been there every time all I gotta do is pick up that phone and dial that red number, and Jim's always there to answer the phone. He's always gave me great advice about the sneaky snake trading strategy, chart patterns, and moving averages.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It is noon Eastern time here at the New York Stock Exchange, and investors are in a buying mood with tech sector leading the gains right now. Let's get into it with a check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 is better by almost 0.75% there. The Dow's got a gain of a little bit more than 0.75%. NASDAQ 100 rallying more than 1%. So too are small caps. Russell 2000 has a gain of almost 1.25%. So really,
oh, I know what I needed to do today.
That we've been watching.
I got to do that now.
This week, a lot of the stories been about mid caps.
I about forgot. Paper towels.
In the S&P 500, you've got information technology at the top.
top of the list there. It's followed by industrials and utilities there for that run. Here's the roadmap for today's show. We'll look at example option strategies for Micron. It's getting bid up today. Plus, the team from Blackfolio will be along with new data on DoorDash. Also on our radar today, we've got NVIDIA. That is catching a bid as we watch.
What the heck is this here? Well, I just remembered you got a trip to the warehouse and pick up some paper towels. Them people at the IRS, you know their hands get kind of dirty. They use these paper towels in excess. Why did you audit me twice during the Clinton years, you son of a bitch? Son of a bitch. Whoa! I thought that was kind of clever. The IRS. Dirty hands, so they use the paper towels in excess. Let me see, I'm going to try to pick someone out in the room that has dirty hands right now. Let me guess. Well, I got slim pickings. Here. I'd say Mark, just because of the name. Mark, can you tell me the last time that you spent a dime and you washed your hands? Did you wash your hands before you eat chow? Did you wash hands before you milked a cow? When's the last time you washed your hands? Okay. He'll get back to work here soon. Mark liked it. Well, my wife called me today, said I met a man on YouTube. He plays a 6-string guitar. Well, I sent him a heart. He was live on YouTube. And he got up and he played his 6-string guitar. I'll take you away from your old man. Just come with me and hold my hand. Whoa! Okay, I'm about done. The creative sign up. We got a double top on TSM with a new high. And look at that SPX. What did it just do? New high. Okie dokie. Well, Nvidia has a new high.
Activity that we've also had in the markets, that's been a positive, but
Yeah, it
if we
has.
start to see maybe a little bit of more volatility come out of the markets, I think that might negatively impact maybe some of the
$5.10.
trading revenue that we're expected to see start to ramp up or continued ramp up in that area. That might be a concern moving forward. And you start looking at valuations; they're still pretty elevated. Financials are always lower than maybe tech or something like that, but at the same time.
Bald head man on TV. The SPX just had a new high after forming a rising wedge. So we have a rising wedge, and we just had a new high. So we're getting ready to squeeze. That was what Bobo's trying to say. Oh, I guess some of you don't know who Bobo is. I think we could form us a little flag here, please. That's a rising wedge. And we're up to number 4. Rising wedge, double top. Are we gonna break? Break. Let's see. Rising wedge, double top. Are we gonna break? Double wedge and double top. It's a rising wedge. Okay, well, I'm not in the trade. I got out of it $300 ago. And this was going to be, this could have been $1,000 one. Or was that the one? No, I don't think this was the one. Yeah, it was. Because it dipped. And Morgan Stanley's up $10. Which it's a big pop. What the fudge, man? Where's all my Can't tell me I don't have a regular chart up here. Oh, it's because of that freaking candle. Daily, it shouldn't bother it none. Oh my, look at that. That's up 100% in a year. Morgan Stanley. Huh. I don't think I would have expected that, but they didn't sound like banks were too bad today. So here's Citigroup from yesterday, 110 to 118 today, double top. Okay, I'm done with you. Time to knock it down somewhere. I better get it up, put it up right.
Me is such a good example of why it's
360.
really in the grand scheme of the trajectory of this company. It's planned to make some of these improvements for quite some time, but what changed is the market's belief in that. Whether that's because the federal government has made some investment and there's this feeling of a backstop.
So rising wedge just right.
The sentiment, the belief that Intel will ultimately fulfill its plans is, to me, what has changed. So at some point, they're going to have to actually deliver on this plan. But for now, just the story being a positive one and an uplifting one has certainly uplifted the stock.
That's a great point, and I think you're right, especially given how early we are into the year, to take a longer term view on it, and we'll see if Wall Street continues to be a believer in that one. We've got bull versus bear coming up. The guys will get their example together for Micron. That stock is moving higher today after several analyst price target hikes. We'll have more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. The AI trade is alive and well, and shares of Micron are up more than 2.5% right now. Today, you have Wells Fargo boosting its price target on the stock to 410. Wells says AI workloads are tightening memory supply, which supports pricing strength and earnings power. Add to that, Barclays is also more bullish on Micron, raising its price target to 450, which is all the way up from 275. Time now for the tug of war on Micron. For that, let's welcome back in our co-hosts Tom White and Alex Coffey. It is bull versus bear time. So before we get to your example trades, we got to talk about your thoughts on Micron. Alex, I'll start with you. What's your thought?
Yeah, clearly this was the area of the semiconductor trade that got all the excitement towards the end of the year and early this year, and that only continues. That said, when you look at this marketplace, if you are looking for a trade that might be running more on momentum than any other parts of the semiconductor trade at the moment, I would argue it is this memory space. Time has also shown
SPX off top
that
the orb.
tend to be a little bit more boom
On the polar
and
back.
then unfortunately bust when it comes to memory chips. So I think that this is a situation where I'm not calling for this to unravel tomorrow,
Oh, yeah.
but in time you may see a repricing, and it may be a steep one just because that's what's happened in the past. Now, classic disclaimer, past performance not indicative of the future performance, Diane, as you know, but in the case of Micron and these other semiconductor chips, that is the path that they have typically followed.
Disclaimer there, I like that one. So Tom, besides Barclays, besides Wells Fargo, you also got RBC. Now they're initiating coverage with an outperform rating. They've got a price target of 425. They point to the strength in sales of its high bandwidth memory capacity. It's sold out. They say they're executing well. They think that there will be more share gains from here. What's your take on Micron?
Well, typically, historically following this stock, it's been a cyclical one, right? It's all based on demand. It's all based on pricing for DRAM, for any of the legacy parts of their business. But now you throw in this new mix with high bandwidth memory chips where, the AI workloads. Now, they focus mostly on training.
Paper
Now,
towels. I
the
keep
AI
forgetting.
workloads kind of go over into inferencing, that's going to be, 80% of the AI market down the road, and that's where they're gaining market share against their competitors in the HBM market space. That's SK Hynix, that's Samsung, and then the legacy parts of their business, the DRAM, the NAND, the pricing's through the roof because you need more of those as the AI data infrastructure gets built out. So everything's kind of in alignment here, and that's why you've seen the stock move up over 230% over the last 12 months to record highs here earlier this week. Now, Citigroup did come out with a note. They took them off their focus list, but raised the price target to 385. But as Alex mentioned, you got to start getting a little bit concerned here because historically, memory chip makers, whether it's Micron, whether it's STX, whether it's Western Digital, they always trade at low multiples. But that multiple's begun to expand as their footprint has expanded and the investments into the build-out continue to expand. And remember, the amount of memory chips that you need to run these AI training models and inferencing is 4, 5, 6 times more than traditional memory. So that's a bonus for them. Sold out through 2026. The CEO has been pretty adamant about that demand is not going away anytime soon. And this has been the winners over the last year in the space in the SP 500.
Well,
those three names I mentioned,
I'd say the bottom of the orb, around the
winners
200.
in 2025, and it looks like they're going to continue to go up. This stock's up 20.
I'm getting ready to go run a couple of errands, and I'll be back.
Because I'm not a believer in this space. I just look at its own performance over the last year. The stock has gone from $100 a share to $340 plus a share, but during that path, it had a 40% drawdown and 2 additional 20+% drawdowns. So this is not a stock that trades without its fair share of volatility and volatility in both directions. So I looked at a put calendar spread, looking for a repricing of this stock over the next, let's call it 2.5, 3 weeks, down to the 1 month moving average that trades currently around or just below $310 a share. So 310 was the target for this particular example. It's not selling next week. It's actually selling the Jan 30th expiration and then buying the February 6th expiration, looking to spend $2.50, which would be $250 in risk. And it's, again, targeting that 310. So it's about a 10% drawdown over the next 2.5, 3 weeks. If that were to happen, this one would have a chance to be a decent winner for those who are willing to take the risk.
Yeah, I'll go ahead and break this one down, Alex. Just a 1 week wide put calendar to the downside. Looking for that 310 level, right? Expecting maybe a little bit of a pullback from these $343 levels. Maybe some consolidation warranted at this point because the RSI getting close to being overbought at about 68 level right now. Anything above the 70 level is considered overbought on a technical basis. But buying the February 6th weekly options that expire in 22 days, buy the 310 put, sell that same 310 put in the near term, January 30th weekly options that expire in just a couple of weeks here. 250 debit, there's your risk, $250 per spread. I think one of the key things with Alex's trade here is that, yeah, it's a bearish, slightly bearish trade, but look at the range that you have for potential profitability on this one. Yeah, you make the most money at or near the 310 strike, but you've got probably a range of about 295 to the downside and maybe 330 to the upside to potentially be profitable. So while you're aiming for 310 to the downside, you've got a pretty decent range. And if we get a pullback in Micron, which has seen some falling volatility levels, that makes these calendars a little bit less expensive because you're buying Vega, because you're buying the further term option. If we get a pullback in Micron, that's probably going to, or historically it's seen implied volatility levels rise, and that could actually expand this put calendar also. So taking a view to the downside, limited risk, $250 per spread on this one, but look at that range that you have to potentially be profitable on this 1 week wide put calendar to the downside, looking maybe some consolidation, a little bit of a pullback. Now, I went a different way, but where we both could be potentially profitable on this this type of trade. I took a little bit more neutral to bullish stance, but I used an unbalanced put butterfly to create a strategy where I'm going to take a credit in upon initiation of it. So I went out to that same February 6th weekly cycle that expires in 22 days. I'm going to buy one of the out of the money 325 strike puts. I'm going to sell two of the 320 strike puts, and then wrap it all up and buy one of the 290 puts on this trade. That makes up the composition of this broken wing or unbalanced put butterfly. So my credit that I'm taking in on this one is going to be roughly about $4 credit. So what does that mean? Well, anything above the 325 level is going to be a profit of $400 per spread, right? You just get to keep that credit that you collected. Now you can see here from the risk profile, as it gets down closer to that 320 strike, you get a little kicker there on profitability because you're short two options on that 320 strike. Now, what's your downside on something like this? Well, if I collect a $4 credit on it, it takes my break even down to 311 to the downside on this trade. So basically about $30 below the current share price in Micron. So I've given myself that cushion. Now, I'm taking a $4 credit. I can make a little bit more if it falls at or near 320 over the next 3 weeks. My downside
Sideways,
is
God, what a sucky day.
$2,100 to the downside, but that's all the way below $290 per share. So while it's a
you got the right shoulder
type of directionally biased trade, I actually make a little bit more.
here on the SPY. You got the right shoulder down here on the bottom of the on the lower support of the orb. So you got left shoulder, head, and right shoulder. We could tumble around there the rest of the day and hold that support, or she drops and more. But that's a possibility if this doesn't hold. Definitely 691.50, 693.50. Mark my words. Mark my words. Is anybody going to mark my words? Because they're going to be marked right there where it says mark. And there we go. You're going to like this. 693.666666. 666666666. 693.6666666666. What the hell's he talking about? That's the right shoulder. Okay. Oh, I got it. I see what you're saying, Jimmy. Hanging out with the wolf pack. Jeez. A little knife here. What's going on? Uh-oh. Before Jim leaves, is he going to get a chance to take the 200 SMA? The crowd's going wild here at the sports arena. Come on, Jimmy. He doesn't want anyone, so he's got to go now and do his thing, or he's going to get in bad trouble. You know what I mean? And we don't want to do that. I have two moving averages with the same time frame, the 200, but one is what? An SMA, and the other is a EMA. Make that perfectly clear. NVIDIA. Okay. Well, man, that looks real good right there, I'm telling you. Once you get triggered. Oh my gosh. I gotta stretch. Well, oh, I know what I needed to do. Almost forgot that too. So we got paper towels and post office box. Yuck. Well, we got that 200 SMA. That's what I'm waiting for. And, oh, also, you have the VWAP over here on /ES. And at the SPY, SPY's at the VWAP. SPY's at the VWAP. Be careful. This all started back at the 69.80 strikes when I went up to her and I said, baby, I got too involved in typing in the SPY at the VWAP that I did not take the trade. You had a chance to take it at $2? You gotta be kidding me. Is it gonna hold? That's the question. $2.15. No, I think it could drop. I mean, it can hold. I raise my alert up. No more 666. Oh, we might get it. No, we won't. Let me see if we can get 666 here. We'll just put 7777. Okay, we've changed the alert. Uh-oh, we just got triggered. Pay attention. Oh, Jim. Man, I remember we used to trade like this when we were kids. Crowd's going wild here at the sports arena. Jim's alert just went off. $2. SPX. Ladies and gentlemen, we just hit the 200 SMA on the 1 minute time frame on the SPX. Pay close attention to what Washboardjim's getting ready to do next. Uh-oh. 69.80s. We're going to try to break the 9. Now, we're not totally bullish yet, but do you see a little thing up there that I've talked about before? And I said, damn, I wish I was in this trade. Do you see it? Can anybody write it down in the room? What it's called? He's a drunken sailor. Okay. You ready? Jim's alert. Pat attention. What the hell does that mean? We don't pat attention around here, we pay attention. Okay. I want you all to check out where we are right now on the SPX. We just now moved above the 9 EMA. Now that gives me some confidence in this trade. Now we have the 69.80s at $2.20. They were at $2. We have a question. Yes, Washboardjim, I've noticed you've traded at 69.80 a couple times today. Is there a reason why? I said, well, yes, there is a reason why. Because it has the highest volume out of the money closest to the money. Write this down. It's the highest volume out of the money closest to the money. Oh. Oh. Jim, we're going down on it. I'm scared. This is called the retesting position. We didn't fully break the 9, which I could say don't worry about it. But we needed a whole body candle above the 9, and that did not happen. Not in my strategy. So when we get the body above the 9, then my confidence level, like right about now, is starting to build. I'm a lot more confident in trade now, for now. There's no doubt. We just don't need to pull back here, because then I'll be totally embarrassed. Well, the candle's not over yet. That's correct. You have to wait until the candle's finished. And this is what we're talking about right in here, baby. Yep, see? It tricked us. Didn't that suck? It was a trick. $2.20. The 69.80s at $2.20. Blanket. Randy. Oh, my darling, oh, my darling. It's a risky trade indeed. Okay, it was a hammer off the 200. Nope. This could be my special date I've been waiting for years. Hello, this is Jim with Always Clean. May I help you?
Hello?
Yeah. Oh, we just got to bounce. Baby. Are you there? Yes. You called just in time. You're my lucky charm. Can I get your phone number? And I'll arrange us a little date. Like, to Cabal, baby. Yeah. Okay, goodbye. You can't carry on a conversation with women anymore. All they know how to say is, hello? Are you the Washboardjim? We're in the SPX 6980s. We just had a spike. Jim had an orgasm as he got his phone call from his lucky charm. We got the 63 EMA coming up. You know what to do. Washboardjim's exit idea, course 101. Says we have different. Oh, there it is. What do? You make a business decision. Now, you want to be in the heat of the moment. You want to scale out a few contracts. Once you hit the 63, you know, you might run up there and hit that next one. That's the 50 SMA. But did you notice the 9 getting right across the 21, Mama? $3.10. Jim, you're almost up $300. There it is, 300. I'm up. Uh-oh. 50 SMA. I'm about. How does he do it? How does he? Oh, there it is. Oh God, $3.40. Woo! Woo!
Yeah. It's the Chicano. Uh-huh. Yeah. 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 Opening bell is the sound that makes it go down. Down, down. Sneaky snake, drop patterns, moving averages, and being in the now. Down, down. Opening bell is the sound that makes it go down. Down, down. funky, stingy with this grade. We got a lot to prove. Patience is the key for gamma, my jammer moves. Buying the pullbacks, riding rockets and rips. Protecting our assets, pouncing on the dips. Market maker shakeouts. Standing our ground, waiting on our setups to catch our crown. Open the bell is the sound that makes it go down, down, down. Flicky snake, sharp planners, moving averages and being in the now, down, down. Open the bell is the sound that makes it go down, down, down. Flicky snake, sharp planners, moving averages and being in the now, down, down, down. Get the dick, 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 get the dick. Pin in the man with the pin in the now. Get the dick, 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 get the dick. Pin in the man with the pin in the now.
Yeah. That's the way to do it. So, I want you to, again, I'm not going to say it's going to work 100 times, all right? This is not, Jim, don't say it. Okay. Lesson number one, Jim gets out of the trade on a parabolic run. Now look at it, it's already dropped. Do you understand? Next one is this thing right here. This right here. This hammer. Coming down and hitting that 200. Beautiful. But I'm not going to say it's going to do it every time. But that kind of convinced me to have a little confidence. Then once we broke the 21, my confidence level rose to the roof with a 9 over the 21 crossover. Bull flag off the 200 with a hammer into the 50 SMA after 3 white soldiers out of the trade. So that's how you do business. You like how I do business or what? George.
In the world. And I think that the aspects too of competition.
I'll be back, you
have to
snobby
consider the
snoot.
application-specific integrated circuit world. You have Broadcom. You have Marvell. You also have AMD in the GPU stack starting to compete with NVIDIA in terms of pricing, affordability, as well as technology inference. But at the same time, you know, NVIDIA is still the largest player and the leading player in the GPU 3D accelerator names. And so with that said, they still have a first mover advantage, but over time, you know, competition will eventually erode those margins, which are still very high, 53%. On essentially 70% gross margins. That's exceptional. And that's why this stock is an exceptional market cap, because it is an exceptional business. But again, those numbers may not necessarily last, you know, going forward, but they certainly can in the next year, 2 years, like I said, with those sales numbers, over $300 billion between this year and next.
All right, thank you, George. That's George Solis, our senior markets correspondent. Now let's get Tom back in here for example trade purposes. So Tom, you've got the example trade in NVIDIA. George made the point about how it's been trading recently. We're, you know, some time out from earnings. What's your approach that you're going to take?
Well, I think the question is, what's wrong with NVIDIA, right? You've gotten these great stories, Taiwan Semi, NVIDIA uses them to make their chips. Jensen Huang, during his last comments, whether it was at their investor conference or whether it was earnings, has talked about the demand for Blackwell. And then the new iterations that are coming down the pipeline with the Rubin chip. They're continually innovating at this point. One of the overlooked things with NVIDIA is they're getting into the autonomous driving realm also. They came out with the announcements a couple of weeks ago. What does that do with Tesla? Because they're creating a stack for the other automakers to potentially use. So the innovation's always there. You start looking at valuations, trailing PE around the 45, 46 level. At this point, the forward PE is only 24 times. And you've got a growth rate of over 60% in EPS and revenue for NVIDIA. I think that's why a lot of people out there are going, well, hey, you know what, we already saw the rise from mid-2023 into the end of, towards the end of late 2025, where, hey, the valuations went up. Well, they've grown into those valuations. And I think that's going to be the key going into their earnings event, which is at the end of February. So you've got some time on this one, but everybody kind of scratching their head because the stock is down 11% from those all-time highs, continue to consolidate. So I looked at a strategy that takes advantage of a little bit lower implied volatility levels. The IV percentile rank in NVIDIA is at 5%. So what does that mean? Well, we're at the bottom 5% of implied volatility levels that we've seen over the last 52 weeks. So implied volatility not really elevated because the stock's kind of done nothing over the last month or two. So I looked at a strategy that takes advantage of low implied volatility. Now, I'm looking at something that is bullish for my example trade here. If you think the stock's going to recover, maybe like some of the other names within the tech space. So going out to the February 20th monthly option. So 36 days to expiration. We're going to buy the 185 strike call. That's in the money by just over $3, right? It's got that higher delta. It reacts more like the stock. And then against it to offset some of the costs, and maybe it goes up, but maybe it doesn't go up to 210, 220. You sell the 200 strike call. So bullish, $15 wide call vertical. You're paying roughly about a $660 debit for this. That's going to be your risk, $660.
Now we
per
pulled
spread,
back.
with the potential to make an additional $8.
Well, we might see the 200 EMA this time.
At expiration, basically in the next 5 weeks or so. 660 debit, if you pay that, your break even to the upside, 191.60. So on a percentage basis, you only need just over 1% to get above that break even. With the stock currently trading about at 188.50, you only need basically a $3 move to the upside. So not a big, massive move to the upside on this one. It's directionally biased, taking advantage of that low implied volatility, offsetting some of the costs by selling the 200 against the long 185. A lot of people might say, why don't you just buy the 185 strike? Well, it's going to cost you more money. It's going to take more to get above that break even if you pay more debit for that. So offsetting some of the costs. So a measured bullish trade here, Diane, with the expectations that if you think it's going to rally over the next 5 weeks, this takes advantage of it.
All right, a measured bullish trade there. Call vertical is the approach there for that example trade. That is going to do it for us today on Fast Market. You got market still higher today. I'm Diane King Hall alongside Tom Whiter. Thanks again to Alex Coffey, who you'll hear from shortly for Next Gen alongside Jimmy Horn. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you with unlimited...
It's, oh, see? Patience. Not the double bottom because we broke below the 200. So you wait for the next support, which is the EMA. Get ready to take it again. Crowd's going wild here at the sports arena. Oh, what's this? Oh. Okay, get ready, Randy. I'm gonna tell my sweetheart, tell her to get ready. You ready? Randy? Okay, we're here. We've hit our destination. The SPX has just landed at its destination of 69, 63, 83, 83, 83, 83, 83, 83. 6963.83838383838383838383. Man, don't that look pretty? Even off the... Ooh, that looks real nice. That really does. But how far, I don't know. Could be short-lived. Couple, well, maybe $10. No, it wouldn't be no $10. It'd be 3. 4. There it is right there. Just a little bit more. How's he do it? $2. This guy is nuts. They're at $2.15. He did it again. Resistance. If you got in this trade, would you do me a favor? I think you know what to do before I even suggest it. Why, Jim? Why should I do that? Hello, my name's Lori Ann. I'm your upstairs neighbor, the one you keep knocking on the ceiling every once in a while when I'm in the shower naked. Would you do me a favor? Well, I took your advice. You were talking earlier today and a little bit last week about your trading strategy of exiting the trade at the 63 EMA on the 1 minute time frame. Well, I took the simple strategy of the 200 EMA, got in the trade. This was right after 3 black whores. We had tweezer bottom with a kind of like an inverted hammer. And then I messaged my mother. I said, Mother, I'm $200 shy. I just deposited $50,000 in this trade, and I need $200 more. So she loaned me the $200. So I went in there and to the kitchen and fixed me up a little drink. Come back here at the table at the desk, and Dolores can't keep her damn hands off me. I tell her shit. So I'm sitting here, and all of a sudden I said, exit idea, we're at the 63 EMA. So what do? You scale out, you hold a couple, you secure that profit. So this was off the 200 EMA, called out, waited. This is what's, okay, I'm going to make this clear. No more bells ringing. I think this needs to be emphasized big time. So everybody stop trading. Living Goose, would you please stop playing with yourself? So I'm sitting here, and we're at the 200 SMA. And I'm going, okay, get ready. And we went below the 200 SMA. And once we built that body below that 200 SMA, it got a little bit squeamish. And I said, well, let's see if we can wait for the EMA. So I'm sitting up here, you know, and I'm getting my order all ready, and I'm talking smack. And all of a sudden, I jump in this trade, and here we go again with another inverted hammer. We had 3 black whores. All of a sudden, the sell-off went in and hit the 200 EMA, just like clockwork. Just like clockwork. So he jumps in the trade. Cheap. Cheap. And we come up here and we start dancing around and consolidated for 3 minutes and hit the 63 EMA twice. Sell signal. Now they're at 235. Beautiful. I mean, that's just beautiful. That illustrates patience. There's someone in this room in here this week that has kind of took that upon himself to be a little bit more patient and go with his own. Now he knows who I'm talking about. His own gut. I've been real patient today, and I've had 2 great trades. So I don't know. I think I need to go call the massage parlor. Chug a big chug of water down. Hello, is Tung Soothe in today for the massage? Oh, is this you, Mr. Howard? We have you scheduled at 4:30. You still gonna come in, Mr. Howard? I say, yes. Will Miss Tung Shea be there for me to speak to her? And she said, make sure that you shower. You a little stinky last time, sir. Oh, okay. I'll be there right around 4:30. Bye-bye. Okay. Welp. Need to go get the paper towels. I'm very excited about that trade strategy right there, that plan.
This,
I mean, that was beautiful.
Space, and it's part of the reason it's been such an outperform.
That's an A+ with a triple plus, because I think patience, well executed. Patience. I mean, we were here. I'm quite impressed. I think the old Jimmy would have took this trade. Definitely 3 years ago I would have took it. But to land perfectly off that 200 EMA is just like, and then get out of the trade and look where we are now. Where are we now? 175. It's like 150 to 240. Now we're at 180. Go get the paper towels.
In a prohibition of decentralized finance, he goes on to say that this right now is concerning. Adding the bill would be to kill rewards on stable coins, and it erodes the overall authority of the Commodities Future Trading Commission. So that's a lot to work with, it does seem, but it does still seem like the tone from Coinbase's CEO is upbeat. He said he's still optimistic that they'll get the right outcome.
Oh, I got 3 things I can do now.
So all that to be said, seeing a bit of a drag today, but this name has also, I mean, been
Glad I thought about that right now.
Yeah, and it's still really, really correlated to Bitcoin. But
Paper
speaking of
towels.
correlation, I was just kind of thinking, we just talked
Folding
KLAC,
towels.
which is in a way sort of a bellwether of that semiconductor build out and the AI stuff. Less so than TSMC, but in that realm. Goldman Sachs, big time financial bank, a little bit different, has some correlation, or not really. Then we just talked Eli Lilly, healthcare. Healthcare's always notoriously done its own thing, and then don't even get me started on where Bitcoin falls and its lack of correlation. We have found 4 names and 4 stories that have nothing to do with each other. It's awesome.
It is awesome, and I actually, well, I was going to say that they're not really trading correlation at all today, but I think also give a great read on some of the overall themes of volatility. Like GLP-1s have really been propelling a lot of the healthcare enthusiasm, and then as well as like, you know, AI naturally, and the banks, which have not been as enthusiastic this week, but all things considered, new all-time high.
But building on that too, what has the big theme been recently? It's been, hey, we're in this stock picking, rotation-like market. Well, individual stories should matter then, and they are today. KLAC and semiconductors got good news from TSMC. They're doing well. Maybe a little bit of a disappointing news in the case of Coinbase, a little bit of disappointing news in the case of LLY, Lilly, around this GLP-1 delay. Okay, that makes sense. They're both a little bit lower. You throw in the financials finally getting rewarded for record-setting earnings, and they're at record prices in some of these cases. All makes sense to me.
I know, this is like great for my brain because it frustrates me when the stock price of the performance following earnings does not match at all the report, because then the headlines are so quick to depict something entirely different than the company reported. So this does then tend to please my fundamentally driven brain, but we will leave it there for the top of our show today. Now coming up next, we'll discuss some of the overall thoughts we're seeing from the sell side today on Flutter Entertainment as well as DraftKings. DraftKings with an upgrade, Flutter with a downgrade. DraftKings now up about 4% on the session, and actually Flutter, despite receiving that downgrade, still up 1% today.
Yep, here we go again. I'm not going to get caught in another trade because this could last for a while. But remember, we have to maintain this support level. And we do have a head and shoulders coming up. So I mean, yeah, I mean this could hold right here. If that holds here, we're bullish, and we can run up a lot higher. If not, but then your second support's right here. This is your first one right here. Draw it in. I'm gonna draw it in. See, there's your left shoulder. Here's your right shoulder. Now, if you use a 5-minute chart, you wouldn't be able to see this. Jim, we've heard you've been beat up about your 1 minute. Oh yeah, I know. Bunch of rookies that don't know their shit.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation?
First
It's your
support.
#1 broker
The second
with the
one's
best
this one.
full-service wealth management
It's right here.
skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists.
Could I ask you a favor? Would you shut your mouth? I'm speaking. And the second support. is right there. $69.67.38. Then your third support will definitely be the double bottom right off the 200 for EMA high or low. You'd love to see it bounce above the 200 and keep a higher low. And I'm not in no hurry to take his trade now because this is the kind of day it's been. And I'm going to go do my paper towel. Okay. I need to scratch the bottom of my feet before I take this task. And I've already double knotted my shoes, so I ain't gonna worry about it. It's a lot of stress. So don't forget your key. So I got your 3 supports there.
To about 37, but in terms of closing prices, right around 36 or so. If you backtrack as well, 36 is a notable price level for several reasons. Low point, high points, low and high, kind of stopping and starting at this area repeatedly here. So this is an important price area that the bulls would want to clear in order to establish another uptrend here. Then potentially 40 would be the next place they might have their sights set on here. Our red line here, it was a low point here during a period where we had a sharp rally. That was a subsequent pullback area there. So that could be another potential place to look for resistance. In terms of support, the 30 level, a notable old low area that came in here during the tariff news announcement shock here. That's around where things bottomed out here. We did have earnings that threw things for a loop, but we quickly recovered for the most part. So that could be another area to start looking for support. So if we were to look at our other studies here, our moving averages, we have our moving averages, our shorter term ones, all clustered together right around the 35 level. So our weekly, monthly, and quarterly EMAs are all right on top of each other. Then we have our long-term yearly 251-day EMA at about 37 or so. So that could be another area to watch out for while giving us a convenient supportive confluence at 35 to be on the lookout for. RSI, our measure of momentum, we did see some bullish divergence here while price was in the oversold areas here. Notice that RSI was trending upward, price was trending downward here, and then earnings did give us a catalyst there that pushed us back into more of an uptrend here. But for now, though, you could also argue that we have a bit of a downtrend in the RSI. We aren't really making significant new pushes to the upside. Finally, volume profile. Our heavy volume areas coincide here with our recent range near about 35, a smaller pocket of activity here near 38. Finally, all the way up here near 43 is where things really pick up notably again.
So I know a name that's making again another 4% move today and seeing some favorability really from the sell side today, which is a nice change of pace because there's been varying opinions about the overall expectations for the sports betting market into the new year, of course. So appreciate that, Rick, as we do look at now trading this name, though, for example purposes. We have seen, again, a different tone, it seems like, for analyst Wells today was the one that upgraded shares to overweight from equal weight. Price target of 49 obviously implies some decent upside from where we're trading. So with this mindset and with the recent uptrend we've seen in share price, I mean, walk us through then a more bullish any example trade.
Yeah, one that's just looking for upside, and so the strikes might need to be moved around as the stock moves, but the idea was buy a strike that's in the money, sell one that's just out of the money, try to get the break even near the current share price, and have equal risk reward. So that's what we accomplished when we sent this in ahead of the show. Stock was trading around 35.5, looking at buying a call vertical to the 34.5, 36.5 in the January 30th expiration. So it's just going out to the end of the month, couple weeks from tomorrow. With that, if you do it for $1 debit, you risk $100 on this trade per spread in this example with a chance to make $100. So that's equal risk to reward. You simply add that debit to the long strike in this case, so you get 34.5 plus 1, you get a break even of 35.5. So looking for, again, equal risk to reward roughly, break even roughly where the current share price is or was. In this case, was around 35.5 at the time. Looking for a little bit of upside, that's where the profit is, and if it moves lower, that's where the risk is, and it's capped out below 34.5, and it caps out above 36.5 in the profit zone.
Yeah, now to shift gears and look at, of course, its biggest rival in this space, just because they're both the largest, that being FanDuel, of course, owned by Flutter Entertainment. And this name also saw a pretty substantial repricing last year. The recovery has not been as consistent or as even as though we've been seeing a bit in DraftKings. And so for that reason, it does coincide with this Wells note today where they did actually downgrade shares, and they mentioned the fact that right now they just favor DraftKings as far as its overall near-term upside. And actually, it's amazing because the chart really represents this. So walk us through here what you see from a technical front.
Yes, it seems that this is a chart that's at a crucial supportive area. If you were to backtrack here, 197 was our intraday lows that we reached here during that same low point in our previous chart, the tariff news announcements here. Then we did make some lows beyond that level, almost hit 189 after our last earnings event, but we recovered. So now that's about where our lows came in today, the same supportive region from between about 190 to 197 or so, 189 to 197. That would be a general area to look for support. If we were to breach that area with a strong close below that point, it could be a significant development here in this stock. We could also see that our downtrend does seem to have moderated somewhat, though. Our sharper blue trend line going down across these highs all the way down during this decline, that's been broken now. We have stopped short at this 230 level, though. Our red line here, a high point here, notable lows here, and also previously on our chart. Now you could say potentially that we have more of a modest downward sloping trend line here in white, but either way, many people likely will be looking toward this downside supportive area to hold in the coming days. Our moving averages show that the downtrend is still in play here. Our faster moving averages are below the slower ones. They're diverging apart from each other. Still, prices below all of them. So those are all more bearish signs. We can see that the RSI, our measure of momentum, has also dropped below its green trend line. We have also formed a red trend line after our descent below the 50 midline here. So again, more of a bearish read from this momentum indicator. Finally, if we were to look at our heavy volume trading areas, one is right here. That's the closest one to the upside, around 220. Also pretty important here because that's about where we saw our rejection. If we were to rise above that level, next would be probably around 230, and then 245 are the standout areas.
Yeah, and noting that again, despite some more of a cautious tone from Wells today, still up about 1.2%. So we appreciate that for all of the technical help today, looking at two of our largest names in the U.S. sports betting world. And now, last but not least, as we do think through trading Flutter Entertainment, Alex, for example purposes, but perhaps taking on a bit more of a neutral to bullish stance because, you know, the upside has not been as widespread as what we've seen in DraftKings.
Yeah, and testing those lows again, so I thought it made a pretty clear anchor point if you were trying to structure a trade maybe just below that level. 190, 185, put vertical spread here in the February 20th expiration. So going out of that February monthly cycle, looking to collect $1.25 at least. That'd be 1/4 of the width of the strikes for this example. You can see there that generates a max profit potential of 125, Jenny. Break even at 188.75 on max loss of 375. Rather than starting near break even, in this case you start in the profitability zone, you have to be wrong. The stock has to go lower for you to get to that break even and ultimately max loss. But if you're a believer in this company and you think it's going to stabilize, perhaps an example strategy that could help take advantage of that.
Yeah, and I think well put here, and a good way to look at some more bullish leans on both of these names that are seeing some decent upside along with the overall market today. Now we'll leave it there for Chartmaster, but coming up next, time to talk another name with phenomenal upside in today's session. That is TSMC, which smashed forecasts with record profit, flagging more and more U.S. demand, and shares are up now about 5.5% in reaction.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
There it goes.
Welcome back to Next Gen Investing. It's now time for FOMO, and today we are diving into all of the good we heard from TSMC with a new all-time high today. Joining us in studio, of course, is Marley Caden, host for the Schwab Network, for all the breakdown on TSMC. And I mean, again, new all-time high, finally a favorable earnings reaction. I know also coinciding with some more favorability in banks today, but I do think resetting a bit of the tone and the expectations for these AI names now as we approach the rest of earnings, which will definitely be dominated by a lot of the tech players.
Yes, and I had a conversation about these earnings on Trading 360 earlier today, and Kim Forrest said that she really hopes that this puts an end to the AI bubble conversation, at least in the near term, because these results were a record. They posted a 35% increase in fourth quarter profits. They beat estimates. The stock also hit a new all-time high, as it does appear that demand for AI chips remains very, very strong. Revenue came in at $33.73 billion versus expectations for $32.7 billion more dollars than projected, and sales were up more than 20% year over year. Like I said, earnings up 35%. They came in at $3.14 in terms of EPS versus $2.98 expected. They have now posted year over year profit growth for 8 consecutive quarters. Also, a big part of the positive commentary today are their gross margin numbers. They had a 62.3% gross profit margin, 54% operating margin, and a 48.3% for its net margin. They also said that their high-performance computing division, which is their AI and 5G applications, made up the majority of the sales in the fourth quarter at 55%. Demand from smartphones made up about 32% of sales overall. Now, as far as their chips, they say they're advanced chips. That's everything 7 nanometers and smaller, made up about 77% of total wafer revenue during the quarter.
These things ain't packing up at all.
Up from 69% in 24.
Strange.
In semiconductor technology, it's important to understand why this matters. Smaller nanometer sizes indicate more compact transistor designs. They allow faster processing speeds, and they also have greater energy efficiency. So the smaller, the better in this case. The company is also saying it's going to ramp up its cutting-edge 2 nanometer offerings this year, after rolling out mass production last quarter. So that number could come into play in this Q1. guidance. As far as their CapEx, this has been another big focus. Their CapEx is expected to be between $52 and $56 billion as compared to $40.9 billion in 2025. So that number, a big part of the conversation, at least with the analysts that I've spoken to, about putting this AI bubble conversation to rest right now, because that CapEx spend so much higher than expected, north of $50 billion, just indicates that demand to them is not going anywhere in the near term. Also, their guidance helping this story. For Q1, they're expecting revenue of $34.6 to $35.8 billion. That implies growth of roughly 40% year over year at the midpoint. Management says profit margins should be 63 to 65% for gross margins, 54 to 56 for operating. So not only that, but their margins are improving as well. They're going to earn even more profit on each dollar of revenue it books. So really positive reaction here to TSM. Really favorable response from the street. We're up more than 5.5%. We're seeing lots of companies move in sympathy. As I think, as Jenny pointed out, it has quelled some of these AI concerns.
Oh, I mean, it's got the party started again. It's a really, really impressive rally, not just in TSMC, but the fallout you're seeing elsewhere. That said, you spent the last minute or so talking about some of the things that they provided for the future, how much they're going to spend, the outlook. It seemed to me that was sort of what the street was most excited about. Was there anything else, or was that kind of the cause here, the catalyst for what's been just a very, very accretive day, let's say, for the AI trade?
Yeah, I think those were the catalysts. I think the things most mentioned in conversations I had were the CapEx spend, the increased CapEx spend to be north of $50 billion. So we're talking, more than $10 billion spent this year, which was already a significant increase. And also those margin numbers and the fact that the margin numbers are only going to improve. Now, on the flip of this, the company did cite some potential concerns. No one I've spoken to seems particularly worried about them, but when the company acknowledges them, I think it's important to acknowledge them as well. The CEO, CCY, announced that memory shortage could potentially be a small issue, but added a caveat that their focus is on high-end smartphones, which are less sensitive to memory prices. The other one flagged was global tariff policies as a potential risk factor heading into 2026 because of the uncertainty there. But Taiwan Semi has been expanding globally in recent years. They've got projects underway in Japan, in Europe, and they're also expanding in Arizona. They've even purchased additional land to support new facilities in Arizona as well. So those could help lessen the impact of global tariffs, having a more broad reach in those markets. But they've also warned that some overseas plants will operate at diluted margins compared to those in Taiwan. So small flags there, nothing of major concern that anyone has really brought up to me as something that they find particularly concerning. But when management cites it, I think it's important to bring up.
I do too, and I think it's important to acknowledge maybe what the street would have taken away as any sort of negative, because a different market environment could have been a very different reaction for TSMC. I will say that from following this name as we do, it has had very interesting, really, movements after its earnings that have been, really strong for years. So it's not always like we see this great report and then we see a green candle. It's just not the way right now it works, but it is encouraging to see at least today's
just what the doctor ordered today.
Yes, again, I like when everything aligns. And this story, as Marley just laid out, has been nothing but optimistic. And so as you now think through trading this name on the heels of this earnings, it seems like sentiment has been a bit reset, which was, I think, necessary given all of the concerns around AI and China and the US and all the various headlines.
Yeah, one day doesn't restart the trend, but it's a good start to potentially doing that, I guess is how I would say it. But say you're still a believer, but not all the way a believer that we're going to continue to set new all-time high after all-time high. Maybe you want to go more neutral to bullish. Acknowledge the rally that's been, but also lean a little bit long. So it's a short put vertical, neutral to bullish, going out to the February 27th cycle. Now, the reason I selected a weekly cycle was that it allowed me to look at $5 wide strike availability. The monthly cycle in February on the 20th only had $10 wide strike availability. I wanted to go out to around the 335 level as that coincided with a level of support on the chart around the 1 week moving average. So if I thought that that could act as a level of support, then this could make sense. And so with that being said, $1.50 credit received means you can make a max profit of $150 on a max loss of $350 with a break even at $333.50. So if you think that trend's going to continue, you want a little bit of cushion just in case there's a little bit of a pullback, maybe back to that 1 week moving average over the next month or so, then this one could work out from an example standpoint.
Yeah, and I'm sure one that we'll continue to discuss, as it is one of the most important aspects of the AI build. I mean, the foundry business is one that is brilliant when you consider just the fact that they have their hand in every advanced tech really manufacturing right now. So a story we'll continue to watch, but hey, a 5.5% jump today is definitely FOMO to the upside. So appreciate it to Marley Caden, host for the Schwab Network, for that breakdown on the phenomenal day we're seeing for TSMC, and then of course impacting the rest of the tech space. But coming up next, we will see the new CEO of GoodRx, Wendy Barn, joining the show. She's taking the helm at a pretty pivotal moment for drug prices and patient access. That conversation coming up next.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Welcome back to Next Gen Investing. Joining us now is Wendy Barnes, the president and CEO of GoodRx. Of course, a leader with a decade's experience reshaping how Americans access and afford, more importantly, their prescriptions. Wendy, thank you so much for being here with us today. We know we got news that Surescripts as well as GoodRx have launched Script Corner to help put an end to this pharmacy sticker shock. So talk to us about this development.
Hi, thank you so much for having me. It's a pleasure to be on. Yes, we unveiled actually this week out at JP Morgan our partnership with Surescripts that has been about a year in the making, which aligns well with my tenure thus far in role. And what we are doing in partnership with Surescripts, let me back up a bit and really characterize who they are and what they do, because I think it's important to understand the gravity of what it is we've launched. Surescripts is effectively the engine behind any electronic prescription that is written in the US. They touch pretty much all of those transactions, are integrated into your and mine physicians, EHRs, EMRs, such that at the point of prescribing, they are the technology that actually allows that prescription to ping your benefit, to have that show up at your pharmacy of choice, so on and so forth. So that is really how they function. And by GoodRx integrating with them, what we have developed and have launched with Script Corner is such that at that time of prescribing, a mobile-friendly, web-enabled, secure text link will come to you, the consumer, and provided you opt in, it will present you with GoodRx cash pricing, other pharma affordability programs right alongside your insured price. For too long, most of us as consumers have struggled to figure out how and when and where best to find the most compelling drug prices. We know it's clearly a struggle for many to find affordable and accessible medications, but more specifically, once that pricing presents, you'll then have the opportunity to say, my gosh, the cash price is actually more compelling, or perhaps your funded benefit will be. But what will also happen is that cash price will present at roughly every pharmacy in the US whom GoodRx works with, and that's close to about 70,000. So you will also put in consumers' hands the ability to make that decision yourself. We're incredibly excited about what this means over time. We're being very thoughtful about how we launch this product at present. It's going live in Texas and Illinois, and we'll slowly roll out to additional health systems and their prescribers throughout the end of and throughout 2026.
Yeah, Wendy, I mean, it sounds really exciting. You highlight the pain points consumers already face, doing something to kind of disrupt and shake things up and arm the consumer ultimately with information to make educated decisions when it comes to their health and their medication. So it's exciting. But I mean, you're a year into running things at GoodRx, and of course it wouldn't be a good year without tons of changes. And we got this Trump RX plan and information. Talk to us about where GoodRx is potentially plugging in within that system.
Thanks for the question. Look, there's no question 2025 turned into a wild regulatory and policy year as it pertains to healthcare. But by and large, the notion that this administration is aligned behind making drug pricing more affordable, there really isn't anything that aligns better and more clearly with GoodRx's mission, where we've saved consumers close to $85 billion since the company's inception. So Trump RX really is envisioned, according both to conversations with that team and from what the administration has said publicly, as a repository of best-in-class drug pricing. We've heard the president and other manufacturers talk about those MFN deals that they have been striking. GoodRx actually has a long history of conveying those same brand deals through our platform. We are the #1 recognized drug affordability platform. Consequently, we're a natural partner for Trump RX as they make this platform a reality. As to when it will be launching, that is for the administration and or HHS to publicly declare sometime soon, I would imagine. But when you think about policy, at some point you've got to partner with industry business to affect said policy. And in this instance, MFN pricing is only going to be as good as the manner in which we as consumers can access that pricing. And GoodRx, candidly, is that partner for a multitude of these brand partnerships. So we look forward to supporting this platform when it in fact is available for consumers to use.
Okay, and as we've all mentioned, I mean, right now, transparent pricing is pretty essential to the breakthrough for drug launches. How really is GoodRx positioning itself as that infrastructure layer that does help these manufacturers bring new therapies to market much quicker as well as more efficiently?
Sure. Well, I think, this administration has actually just given us a platform to talk about what we were already doing. We are, I think, north of 90 brand partnerships at this point for drugs that routinely either end up more expensive on your insured plan and or aren't covered at all. Pharma views GoodRx as a marketplace through which consumers are already searching for their drugs and for which physicians are already writing and trying to keep their patients on therapy. We know that on any given day, about 1 in 2 prescribers utilizes GoodRx to point their patients to for competitive pricing. So as such, what this has really done is just allowed pharma to double down with us. Again, we were already doing business with many of these manufacturers. However, in the instance where some were rethinking, should we or shouldn't we maybe launch a drug with a cash price as opposed to maybe waiting until there are more competitors in a drug class, or perhaps until a drug is very late in its drug stage cycle. And I don't think there's any better example than what we announced a week ago Monday in partnership with Novo, being their platform of choice for the launch of the Wegovy pill, which you can secure through GoodRx at about $149 per month, which is the most competitive cash price. But the reason I share that example is that is a brand new drug launch that chose to utilize cash as their launch strategy in partnership with GoodRx, and I do suspect we will continue to see more of that, not only because this administration is pushing on direct-to-patient approach for manufacturers, but also because consumers are asking for this type of opportunity alongside their insurance.
Wendy, our viewership primarily self-directed retail investors who are looking around and they're looking for opportunities. Is there anything that you can share that you guys are excited about in the future? You talked about all the regulatory disruption and things that are changing, but I'm sure it's exciting times as well.
It is. They're also challenging times. There wouldn't be healthcare if it wasn't challenging and there weren't some unknowns. But more broadly, when you just think about the demand consumers have for affordable drug pricing, GoodRx stands to benefit from that greatly, and we stand to serve all of those consumers who are looking for that competitive pricing. We are also in an exceptional position to drive additional brand point-of-sale cash pricing for brands that aren't in the market today, that at present really only exist either on your plan, coupled with a often very high deductible, or for drugs that aren't covered at all. So I see throughout 2026 the expansion of that same business to benefit consumers alongside their affordability challenges. We also see a real moment in time where those same brand drug prices can be deployed directly to employers who are contemplating more of a hybrid approach to managing their pharmacy benefit. So what do I mean? Most of us have employers who have pretty decent coverage, but we all know when we're standing at the pharmacy counter, it can still be incredibly expensive. And that can result in over 1 billion unfulfilled and or abandoned scripts, most of which are abandoned not by someone who didn't have insurance, but by someone who did and simply couldn't afford it. So we see an opportunity to work directly with employers whereby they enable cash pricing and a list of drugs that lend themselves to that right alongside the funded benefit. And when you put those two things together, obviously in compilation with Script Corner that I mentioned at the top of our conversation, we see an opportunity for all of us as consumers to really seamlessly see cash right next to our insurance without having to put in a heroic effort to figure it out, without having to stare at the pharmacist or technician to say, hey, can you help me? Can you figure this out? Then we make their business more inefficient, having to service us in that manner, and by enabling prescribers to not play the role of affordability detective on our behalf. So we do see an ability to continue to make the system more efficient in addition to saving consumers dollars.
Yeah, thank you so much for taking the time to discuss this with us today, as well as just unveil the rest of the vision for, the coming months, as well as the volatility in this space, because I do think affordability is such an important theme and such a wonderful, real vision as we really dive into all of the evolving as policy changes and just all of the things that are still occurring. But really great conversation. We appreciate it. Wendy Barnes, President and CEO at GoodRx. So now it's time for Under 30, and we pivot to Sleep Number, a name that's up 46% this week alone. Joining us now is George Tillis, Senior Markets Correspondent, for some more insight on why we're seeing such an outsized performance this week. And so, George, this name is still lower now on a 52-week basis by about 28%, but we're surging today on top of a, again, 46% climb this week.
Well, I think there's a lot of things going on right now. If you actually look today, the distribution of gains, the Russell 2000 is up about 1.3%, just give or take. And so we're starting to see some push in the small cap names, and that's where Sleep Number really fits in terms of its market capitalizations. I'm going to put it in the micro cap. It's actually around $240 million. And this is a name I haven't looked at for quite some time. I did look at the 5-year chart. It's down substantially. It was trading around $146. Just going back about 5 years. So that's down around 85 to 90% respectively. But this, again, was one of these names you used to see quite often in terms of innovative sleep solutions and premium mattresses. But I think one of the challenges the company's really faced in the last few years is there really hasn't been much differentiation in the premium smart bed aspects of the market, as well as the fact that the industry itself seems to be a little bit more commoditized. Direct-to-consumer types of brands have really encroached on some of these traditional mattress manufacturers. And the other thing is if you think about the nature of sleep technology, one of the things that differentiated Sleep Number was essentially their IQ tracking, which was like sleep monitoring. But there's so many different technologies now that actually monitor your sleep, so that might not necessarily be a compelling reason people are buying it. But nonetheless, as you mentioned, Jenny, it's up quite a bit over the past few days because of the fact that they did release a new product that seems a little bit more affordable, as well as the fact that I think that there's a little bit of a short squeeze going on in this name, considering that around 25% of the shares in the total float are shorted.
Yeah, George, you took the words out of my mouth. I was going to say, are we in a little bit of a meme territory here, perhaps?
I think so. Yeah. To be honest with you, just because of the micro cap elements to the market cap, the short interest is quite high. There seems to be some push in some of these meme, or if you will, novelty and nostalgic brands. So that could be the case here. I'm not saying it's going to continue from here. If you look at the daily chart, around 1250, there's a gap. So it looks like it's filling that gap going back 3 quarters. But I will say that this is a company that is probably going to need some cash soon, because they only have around $1.5 million on the books. The debt level was close to $940 million on $240 million in equity, so it's on 4 times equity. I did notice that they do have positive operating profit of $15 million. Sales last year were $1.4 billion, so they are profitable on a operating basis, but not on a net income basis, because the debt is really encroached on the income, because they have to pay interest on the debt, which is causing the stock or the company to lose money. But nonetheless, it's a company that's not, I suggest, at risk of bankruptcy anytime soon. But I can see why the short interest is quite high, considering the debt level is quite large relative to the stock.
Yeah, and that's a good point. I think that speaks to, I know we're having a phenomenal week, but it's still a name that has been, unfortunately, underperforming for the last 52 weeks, which is, frankly, just more important to the overall picture. But appreciate that, George Tillis, Senior Markets Correspondent, for that breakdown on the phenomenal week that is for Sleep Number. Now, though, before we go, as we check in on markets here, Alex, we have been able to ever so slightly erase, of course, week-to-date losses in S&Ps, as we're still firmly in green territory here.
We are 14 points, give some roundings from an all-time high in the S&P 500. If we were to close here, we're within a few points of an all-time closing high. What a week.
And making some progress on the NASDAQ, which is now only about 1 3/4% off of its all-time high, and that's the one that has lagged, has not seen these recent highs as a lot of these other major indices have. So we'll leave it there for Next Gen Investing for this Thursday. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange on the floor here where the action is. We're glad you're with us. Here's what's in today's show. We'll take a look at some of the unusual options activity that we've been seeing in these options trades. Novo Nordisk, Boeing, Alphabet, Google. Looking also at the M&A activity of 2026 in our panel, ready to talk about those bank earnings. And we've seen Goldman Sachs, Morgan Stanley, and BlackRock today with some great news overall. This week we also heard from JP Morgan and Citi and Bank of America. Here's a quick look at the markets right now. We haven't hit 7,000 just yet on the S&P, but folks are watching S&P 7,000, Dow 50,000. But right now, after back and forth action this week, right now we're seeing 69.71 in the S&P. The Nasdaq's up 255 points. A lot of tech really doing well. Really meaningful shift in confidence in tech, particularly after we heard from Taiwan Semi and also some upgrades in the group that have really taken hold and helped to boost the Nasdaq and the S&P. And the Dow right now, 49,541, up 392 points. Small caps also gaining 1.3% higher. Oil and gold are both lower, and gold is at $46.22 a troy ounce, down $13. And oil, $59.18 the barrel, down $2.84. 1544 on the VIX. The 10-year bond yield sitting at 415. That has come down from almost 420 pretty much earlier this week. So very interesting to see how it's been trending down. And last but not least, Bitcoin, 95,980. And so that's certainly welcomed. We've had a great week for Bitcoin, even though we're down 2% right now. Kevin Green is with me, senior markets correspondent, taking a look at some of the big stories, big news. I mentioned Taiwan Semi, and that really has brought some optimism to Wall Street and really quelled those concerns about an AI bubble, they tell me.
Well, at least for now, Nicole, it doesn't seem like we are talking about the credit side of AI recently, and that's really kind of giving us a little bit of optimism, at least in the near term, that the semiconductor trade could continue to thrive to the upside after Taiwan Semi beat both on the top and bottom line, and they saw their Q4 profits surge by 35% on a year-over-year basis. The company continues to see strong demand when it comes to artificial intelligence, as well as 5G phones, or these smartphones, which is actually a bigger driver when it comes to profitability on a margin basis. And they continue to think that the expansion of artificial intelligence technology is going to last for a considerable amount of time. So they have not only raised their guidance, but also raised their CapEx in order to build out additional fabrication units in order to meet the demand. So you are seeing not only Taiwan Semi up around 5%, but other semiconductor stocks as well, like NVIDIA, and also looking at AMD. So a pretty decent report. This really kind of started the day off really well for not only the technology sector, but also as the market as a whole.
Yeah, without a doubt. As ASML is up 6%, we saw that surge. A customer of Taiwan Semi, I saw Broadcom, Lam Research, KLA, Analog Devices getting upgrades. There's just been so much going on here. The financials also, which haven't been a particularly great group for January, doing a little better here, right?
Yeah, doing a little better. If you actually look at Goldman Sachs, we saw a turnaround. Earlier this morning, we did see the stock down over 1%, and that was because they actually did come up a little bit short when it came to their net revenue for the quarter. They reported $13.45 billion. Street was looking for around $13.79 billion, but the comments on the conference call really gave the financials a lot of optimism when it comes to the 2026 economic outlook, as well as the M&A activity, which is really what is driving the growth for Goldman Sachs, as well as Morgan Stanley. So David Solomon talked about reducing their balance sheet as far as risk, and that has also positioned them really well when it comes to trying to initiate a lot of deals, mergers and acquisitions, bring IPOs to market this year, and that will be a tailwind for them. Morgan Stanley also mentioning the same, that not only here in the United States, but globally, they are seeing M&A activity pick up, and that should also drive fee revenue. So we are seeing the financials kind of call back some of the losses that we have seen over the last couple of trading sessions, and let's see if they're able to close at the highs of the session here.
Yeah, understood. Look, as you talk about the session, we're winding down, just a couple hours left. Anything in particular you're watching? You're always looking at key levels. Your thoughts? Maybe some record closes, possibly?
I hope so, Nicole. The big risk that we have going into the close is this unwinding of a lot of this bullish activity. You are seeing over 60% of the stocks in the S&P 500 in the green, and it's a mix between defensive sectors as well as the technology or risk-on sectors. So if you're kind of looking at some of the resistance levels, we just tested one, the 69.80-ish area is what we highlighted earlier this morning. It seems like it's holding for now, but if we're able to kind of sustain above 69.50 for the close, I think that's a really good win for the bulls. If we actually do see a reversal, start to get closer to around 69.40, 69.35, I would get a little bit more concerned that this was more of a retracement or a dead cat bounce that could lead us lower over the next couple of days.
Yeah, understood. All right. Well, there's always the chance that we might cross the closing high that we saw on Monday. You never know. 2 hours left. Kevin, great to see you. And we'll continue to follow all the numbers that Kevin gives us. He's always watching those key levels to watch. Phil Palumbo is with us for the bigger picture. Founder, CEO, Chief Investment Officer, Palumbo Wealth Management. Great to see you and Happy New Year, Phil. I haven't seen you yet in 2026. So what's interesting is tech back? Well, you know, for a while, we weren't really looking to tech, and there was a lot of concern about, you know, a lot of circular funding and is AI real and all this. Now?
We never look at things like, is something back, whether it's tech back or the market's broadening out. At the end of the day, when you look at these businesses, such as NVIDIA and Microsoft, Google, and Amazon as an example, you know, we're in the second, third inning of this, the biggest technological revolution that we've ever seen. ever seen. So that means there is more wind at the back of these technology companies. And the way stocks work is they take breathers, then they move up and take breathers, or any kind of stock, right? As long as the earnings continue to accelerate. Earnings accelerate when GDP or the economy is strong, and that's the current environment we're in right now.
Understood. What sectors do you like the best? You talk about, okay, so there is potential, obviously, for tech. That has driven us for the last few years. What are your favorite sectors that are going to be your go-to when you comprise a portfolio?
Yes, we never look at any type of sector. We really look at businesses that we feel that have a dominant position in their industry, lots of free cash flow, and can compound that over long periods of time. That's the main objective we have. Now, what works for us in doing this for about 26 years is that we look for sectors that have been beaten up. For example, last year, software is one of those examples, and we want to understand first why is that, and the reason why software has been beaten up is because of the overhang of AI taking over some of these businesses, or less software seats. And so a lot of these stocks, like, for example, Salesforce is one of them that has come down from the high about 30%. And we really want to understand, like, what's going on, and should we be investing in one of those businesses that dominate? And Salesforce is an example that does dominate the CRM business. Their market share is 30%, incredible cash flow, incredible anticipated cash flow over the next 2 or 3 years. Nothing's broken about their business. And that's true for many software companies. So for us, Nicole, that's how we look at what sector's been beaten up, who dominates in that sector, and if we invest and be patient over the next 3 to 5 years, that's how we can make some good money.
Understood. So you're looking for leaders, companies with a moat, with good cash flow, at home and abroad. You think there's opportunities in emerging growth? Like, what kind of, is that here at home that you're talking about, that?
Yeah, so emerging growth is a strategy that I started 3 years ago. The idea behind that is to invest in 2 sectors that have dominated relative to the S&P 500 over a 20-year period, and that's technology and that's biotech. So those 2 sectors, we combined it in one strategy we call the emerging growth strategy. So I have 2 portfolio managers that partner with my firm to execute this strategy. The idea behind it is to look, Nicole, where people are not looking, right? So everybody's invested in NVIDIA or Microsoft and Amazon. And of course, we own that in my core strategy that I run. But in emerging growth, those are businesses that are really growing by 100%, 200%, but yet there's a lot of volatility there. But we feel they could potentially be the next $1 trillion companies the next 5 and 10 years. And so that's a portfolio of about 50 companies. And they're investments that most people are not looking, and that's a strategy that really has outperformed the NASDAQ and the S&P since inception.
I see. Software, let's talk about that. I mean, you talked about technology, biotech. Is software in that group or not necessarily?
No, software would be separate.
Okay. Tell me more about what you like in software.
So far, like I said, Salesforce is a company that we've owned it for a while, but then we started to add more of it at the end of last year. We're looking to add a little bit more this year. It's been a rough start, though, for all software companies for the same overhang issue that I just continue to talk about. So again, we look at Salesforce as they continue to dominate in the CRM space. They've done a great job with Agentforce, which is their agentic AI. That business now is up year over year, 330%. When you combine the database business, the data cloud business, that's up 114%. Both those businesses combined, and now both those businesses combined are $1.4 billion business within the world of Salesforce. Now that's not 50% of their revenue; it's 3% of their revenue, and I totally get that. But the growth of that, can grow parabolically over the next 2 or 3 years, and then eventually be a significant part of Salesforce's overall profitability, because most of the AI that companies are including in their business models, the margins are much greater than the other parts of their business.
And you're definitely seeing opportunity in Amazon. In fact, you've been increasing your exposure, right? And Amazon's such a multiple faceted company, right?
Correct, yeah. Last time, Nicole, I was with you, I spoke about Amazon, and I continue to speak about it today. Amazon last year had a tough time. It was only up 6% with the S&P up 3 times that or greater than that. And for Amazon is a company that got hit a little bit last year due to the tariffs for obvious reasons, a big part of their business. But Amazon really has done an incredible job laying the foundation for the e-commerce business, the fixed foundation to the margin to expand in that particular business, number one. Number two, the cloud business, they hit that 20% number that investors were looking for year over year. In terms of growth, their backlog is extremely strong. Their advertising business now is growing 20 to 25%, high margins. I think Amazon is doing a great job executing overall within their businesses. And I think tariffs fall by the wayside, and you can see some good performance out of Amazon, which you're already seeing year to date.
Understood. All right. Well, Phil Palumbo, it's great to see you. Do you have a year-end target? I know you're sort of doing more stock picking and being very specific, but I mean, do you think at the end of the year we're going to be higher than where we are now in the S&P 500?
I believe the short answer is yes, but there's going to be, I think, volatility this year. Usually you get volatility around the new Fed chair, and you also during the second year of a presidential election cycle with the midterms coming, and there's a lot of volatility around geopolitics right now. So I wouldn't be surprised to see a drawdown of 10 to 20% this year. Ultimately, I do believe we end up higher than we are today with a specific number. We don't believe in that. It's really difficult to forecast that. For us, again, it's that long-term focus, finding good quality businesses that dominate, high free cash flow, and stick with the long-term discipline. And over time, you'll do really well.
Yeah, but I can get your optimism through that. Phil, it's great to see you. Phil Palumbo, Palumbo Wealth Management. Thanks so much. Coming up, Options Corner, and Tom White is standing by. He'll highlight some unusual options activity that we're seeing for some big names to watch. Novo Nordisk, Boeing, and Alphabet. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the watch list. It's time for Options Corner. We welcome in Tom White, host of Fast Market here on Schwab Network, taking a look at some of the options trades and the action in the news. And we'll start with Novo Nordisk. Great to see you, Tom. Some of your thoughts on Novo, which is down about 3.5% right now.
Yeah, taking a little bit of a hit. It's still up about 11% so far in the month of January, so it's had a little bit of a bounce back, but at the same time, it's still down about 30% from year-ago levels. And if you look here, you can see the chart here on Novo Nordisk. If you overlaid Eli Lilly over it, it's the exact opposite type of chart where it's gone to all-time highs recently, about 8% off of those record highs. So that competition in this space. Now, Novo Nordisk did come out and state, the CEO did state earlier this week that they're still on the prowl for more M&A activity, M&A deals. And this comes after Pfizer, they lost that bidding war with Pfizer for Metsera late last year. So the CEO basically came out and said, hey, we need to start consolidating in this industry. There's a lot of biopharma names that are developing their own GLP-1 drugs, but they continue to get out-innovated. Now, they did release their Wegovy pill. It went on sale in the U.S. They partnered with Amazon Pharmacy and some others to get that out. They've lowered the cost. That's going to hurt their margins, but they're trying to get back into this more competitive theme here with Eli Lilly, who's been kind of eating their lunch. And Eli Lilly hasn't gotten approval from the FDA on their weight loss pill instead of the injection either. But we've seen some nice gains here over the last 2 weeks or so, and that's probably promising. But we did see some bearish activity as far as option flows go, maybe even on the back of this 3% drawdown that we're seeing today. Trader bought 5,000 of the March monthly 50 strike puts, paid an average debit of about $1.47 for those. So the break even where this trader starts to profits all the way below 48.53 over the next 64 days. That's about 14% below the current share price. While they've given themselves some duration for this to kind of develop, if they think the stock's going to pull back, you got a pretty big 14% decline that you're going to need to get below that break even. Put volume about double normal daily average volume. This could be a speculator thinking that the stock's going to remain under pressure. It could be somebody hedging a long stock position on the 11% rally that we've seen so far. But remember, just about 2 months ago, this stock was below $44 a share. So it's not out of the realm of possibility that we could, revisit those low levels. And this trader thinks that over the next couple of months, we're going to see some more weakness here in Novo Nordisk.
Right. Well, as you noted, we've had an uptrend. I mean, this month still up 12%, so maybe there is some room to the downside. At the same time, you mentioned the pill for GLP-1s, great for folks who have needle phobia. They were saying that these pills, and I did a whole story on this, all the companies are working on pills to go along with it instead of doing the injectables for GLP-1s. We'll see. Boeing is up next. Tell me a little bit about the Boeing story.
Yeah, Kelly Ortberg, the CEO, has done a great job. If you look at the performance of the stock, up nearly 50% over the last 12 months. It's up 14% in January alone, Nicole. You can see here from the chart, we're hitting 2-year highs in today's session. And this comes back on the back of delivery numbers, right? They beat, as far as deliveries, they beat Airbus for the first time in years this year. They're starting to ramp up production. That's going to increase free cash flow. That's been a bonus for them. They're staying out of the headlines. You know, typically when you got stocks in the headlines, it's good news. Well, for Boeing, it's typically bad news. So they've stayed out of the headlines a little bit. They're still continuing to work to expand their production numbers on the 737 MAXs. Delta Airlines just came out with earnings. They put in another order for up to 60 787 planes on top of the over 100 737 MAXs that they have ordered. So they're starting to get more orders, and they're starting to deliver more planes. That's going to help that balance sheet, draw down some of that debt, and increase those free cash flow numbers. We've seen a lot of price target hikes earlier today. Susquehanna raised the price target to 280 from 255. A fundamental backdrop for the commercial aerospace, defense, and aftermarket's quite favorable. And remember, they've got a backlog of nearly 6,000 planes. So about 6-7 years of backlogs already built up for this company. But we did see some bullish activity in here. Somebody thinks this rally is going to be sustainable. And this was also out in the March monthly options. Trader bought nearly 2,000 of the 270 strike calls. Paid an average debit of about $4.50 on those. So the break even of $274.50 over the next 64 days, that's about 11% above the current share price in there. You're going to capture an earnings event in this series also. So that might be an event that could propel the stock higher. But yeah, the stock's had a great run. This trader thinks that we're going to see some more gains here in Boeing over the next 2 months, Nicole.
It's been an exciting story. I always love to see that, they're getting new orders, and it's a great American company. It's our national security, and it's been on this great uptrend here, as you noted, in 1 month, about 20%. So nice to see Boeing on the move and maybe some new highs, as this trader alluded. How about we talk about what's going on with Alphabet? $4 trillion and go ahead.
Yes. I mean, there hasn't been any bad news, Nicole, in this stock over the last 6 or 8 months or so. Remember, it was in early 2025 that everybody was stating that, that the death of search was going to hurt Google Alphabet. Remember, stocks hit their lows last year in April, right? But Google was trending lower from the beginning of 2025 into those April lows due to the fact that everybody thought these chatbots were going to take away their search business, which they own about 90% of. And that would, parlay into less ad dollars. That hasn't taken place. Gemini, the rollout's been pretty spectacular. As far as the reviews goes, it's better than ChatGPT and some of the others. And then earlier this week, all the partnerships they announced, whether it was Walmart, whether it was Kroger, Papa John's, Honeywell, and some others. So everything seems to be going right. YouTube viewership is up. Ad revenue continues to move to the upside. And then also you throw in the cloud business, which they're number 3, right? Behind AWS from Amazon, behind Microsoft Azure. They're number 3, but at the same time, last quarter, their growth rate was better than both of them at 34%. So all the silos of revenue generation continue to expand for this company. And we've seen good news after good news. It's about a couple percent off its all-time highs on this little bit of weakness here today. But still up about 70% over the last 12 months. But we did see some, negative sentiment as far as option flows goes in here. One that stuck out to me was in the February monthly options. So these expire in 36 days. Trader bought 10,000 of the at-the-money 330 strike puts, paid a pretty hefty option premium, a debit of about $13 per put that they bought. So the break even for this trader on this bearish position is down below 317 over the next 5 weeks. That's about 5% below the current share price in there. They've got earnings on the 4th of February. The bar is going to be really high going into this report. If we start seeing some numbers on CapEx where they continue to expand those, we've seen that last couple of earnings events for a lot of these big tech companies. If you say that you're still increasing your CapEx, that's not a good omen. But the bar's really high on this one. This trader thinks that, hey, over the next 5 weeks, we're going to see some weakness in the big winner out of the Mag 7s over the last year.
Okay, well, thank you for that. Every day, Tom White here with Options Corner, looking at real options trades, sharing them with us. Thank you, Tom White. Good luck there at Alphabet, Boeing, and Novo Nordisk. Coming up, we'll talk about the outlook for M&A activity, IPOs. We already saw some good news about investment banking, at least from Goldman Sachs and also Morgan Stanley today. Up next on the watch list.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. So glad you're with us. The Dow's up almost 400 points right now. We could be looking for some record closes maybe for the S&P 500. We'll have to wait and see. KLA Corp and Lam Research are soaring today after Wells Fargo upgraded both those names to overweight. Firms saying the recent demand data suggests an acceleration in wafer fab equipment in 2027. Now, Coinbase, on the other hand, is down 3% after the exchange withdrew its support for the Digital Asset Market Clarity Act that is currently in Congress. Coinbase CEO Brian Armstrong said the bill would kill rewards on stablecoins, and he'd rather have no bill than a bad bill. So is this the year? More M&A activity, more IPOs? Well, let's ask the man who knows. Stephen Nigros with me, Managing Partner, TAG Financial Group. Thank you so much for being with us. So I thought it was interesting today when we started to see that Goldman Sachs, Morgan Stanley talked about the deal making and that it was strong, and they also saw in the pipeline more deals to come. Is that what you're seeing and hearing?
I read the same article, and in that, so they had a great year. 2025 was a great year. That momentum will continue into 2026 because I panic every December, so this was less so. Last year was pivotal. It was a transformation year, 2025, where 2024, 23 were not so great. 2020, 21, believe it or not, the pandemic, we flew right through that, and 21 was a year, if you were in M&A, was oversubscribed. This year, we'll see a ton of deal making. I see it because we monitor our opportunities from pitching to closing, and I can tell you the exact numbers, 134 of those. That is up probably 71, twice since last year, double since last year.
That's
so
great.
It is great, and
Why do you
believe me.
think that is? Why is that? Why is there more interest in M&A activity or new IPOs this year?
In my sector, which is insurance, mainly insurance, and that's agents and brokers, right through reinsurers, service companies around them in accident, health, life, and property and casualty. So I think that's everything insurance. We see that there's a ton of capital out there chasing deals, especially on the insurance distribution side, insurance brokers. There are just a ton of capital chasing them, mostly private equity backed. But we're seeing some companies that are looking to go public or have gone public in the past year. And I think that'll happen in 2026 as well.
So when you say insurance, it's also sort of financials too, right?
Yeah, well, I'll take it.
They sort of go together a bit.
They definitely
Tell
go
me
together.
why. And what do you see there?
Well, first of all, insurance itself is so broad.
Yeah.
But we're seeing a lot of movement by, especially in the mergers, the acquisition strategies. We're seeing movement into registered investment advisors, professional employment organizations, PEOs, where people are starting to realize, investors are starting to realize that, the person who's buying his car insurance, house insurance, jewelry store insurance, workers' comp for his employees, that's not 4 clients, that's 1 client, and we can get them all by providing those services to them. So we're seeing a convergence of a lot of different aspects of insurance. So that's huge.
And you said technology is sort of driving some of the activity too. How so?
Where it was once a plus, now it's a necessity. So insurance, AI, or let me say technology, but AI specifically as a subset of technology, because I don't want to rule out, and I'm just leave it to AI,
okay,
will be transformative. I'm lucky enough to have a career that has spanned from a time where spreadsheets were pencil and paper, and they became electronic, and there was email and internet and so on. AI will transform not only my business, but my client's business, the insurance industry or financial services. where there's that much data and correlations that can be derived from that data and so on, where processes become very efficient, that will change everything, and already has. It's changed the way I work. It's made me a lot faster and smarter, and for an old guy, that's for me to embrace technology where every appliance in my apartment blinks 12 is unbelievable. So we do use it a lot, and so do our clients.
Do you think this could be an IPO super cycle this year?
I hope so. I think that a lot of our private equity roll-ups are ripe to do something, and we're seeing larger deals. Like last year, we saw Gallagher buy Assured Partners. We saw Marsh buy McGriff, or Brown & Brown buy Risk Strategy. So I think something else has to happen, and I think it's ripe for IPO.
And I was looking here, I mean, you're mentioning AI, so I mean, I'd be remiss if I didn't talk about some of the IPOs that are coming. OpenAI, SpaceX, also Anthropic, right? Claude, right? Databricks, Cerebras, XAI, those are all strong contenders, they say. In fintech, Stripe, Canva, Discord, just to name a few there. Are you excited for any of these names in particular?
I'm excited. Well, I'm excited for only because I use most of that AI for ourselves and so do our clients. In fact, our clients are building platforms above that to reach into different ones as they have strengths in different places. So I'd be very excited about any of those going public. I'd be cautious too. I don't know what will happen in the end. I'm sort of agnostic to that as well because it's a tool that I would not necessarily invest in, but I would insist that my clients do embrace that to help their chances of success in an M&A deal.
When we talk about insurance, and that seems to be your real niche, right? That's your real niche.
Love it.
Those names, and we think about Chubb and Travelers and so many of the others, do you have specific names that you like better than others, and why?
I do. I think actually, I like the big insurers. So you say Chubb, Travelers, Progressive. Those are great names and great investments.
And great investments.
Great investments. On the distribution side, when you look at Marsh, Aon, Brown & Brown, those are my favorite because insurance distribution, the agents and brokers, is a sector that you just can't move off their target. It's recurring income, it's high margins, there's a lot of efficiencies, there's going to be a lot of efficiencies because of embedded technology. So I think those are the places to look. They're really hard, and we see it at the lowest level. We'll see transactions happen at $5 or $10 million that are rolled up into bigger transactions, and they really do. They're really robust, and they are hard to ruin. I've had clients who tried. Right, I spoke with someone that said, "Art, you're trying to mess up your father's business for 15 years. You need to sell." All right, and it's hard. It's just that recurring, that's sticky.
Yeah.
So I love that sector.
And what about names like Allstate or AIG?
Put them in with Travelers and.
I mean, Arch Capital Group would go in there too, right?
I was once by Arch. Now, if you go down to where you're looking at Arch, or that where you're looking at specialty insurers, that part of the insurance value chain is starting to transform dramatically as well.
Do you like them or you don't
love
like
them? Love them.
Love them?
Oh yeah, because
you love Arch, or you love?
I love Arch and specialty insurers.
Oh.
I love fronting companies, which is a company that just lends its paper for the most part,
right.
so that it transforms from an underwriter to a reinsurer and lends its licenses and rating. Those are good. That sector of the insurance value chain is creating a lot of other companies that will cause M&A to grow as well.
ACGL, Arch Capital Group, is the one that you just talked about. I just like to give the ticker for folks because
Okay,
maybe not everybody knows that one. I mean, they're going to know AIG, but they may not know Arch. It's wonderful to see you. Stephen Nigro, thank you. A great conversation. Thank you. A lot of optimism about M&A activity, IPOs, and insurance in particular, it sounds like, and specialty insurers. All right, Stephen Nigro, Managing Partner at TAG Financial Group. Thank you so much for being with us. Coming up next, we'll focus on some fixed income ETFs. You'll want to hear more about that. We'll be right back.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
I'm Nicole Pedalides. You want to focus on fixed income. Got to take a look here on what's going on with yields, and you can look at fixed income ETFs. Joanne Bianco, investment strategist and client portfolio manager at Bond Blocks ETFs, is with us now. Now, some folks love the yields they've been getting, and there's always room for fixed income in a portfolio, right? Tell me more.
That's right, Nicole. First of all, thank you very much for having me on your show today. Yes, you know, fixed income was a real, it was a hero in 2025, and as it's been in the last couple of years, where investors have been able to capture attractive yields, total return potential, total return across a wide variety of asset classes without the same type of risk and volatility that they see in equities.
Okay, so tell me now, are you expecting rates to come down or stay the same?
Well, I think that we're expecting that, you know, the major moves down in terms of short rates is for the most part behind us. We're not expecting to see a lot more in terms of rate cuts. We could continue to see a steepening of the yield curve where there's higher rates the longer you go out. We think the sweet spot right now is kind of in the intermediate portion of the yield curve where you're still getting elevated yields and total return potential, but without the, you know, the increased risk that you would see in the long end.
All right, so at this point now, how would you suggest someone, when you're talking about the fund flows, are fund flows positive for fixed income? Is this what you would suggest? How should someone do this?
Yeah, no, well, what we've seen in ETFs specifically is that it was a record year in 2025 for fixed income ETFs. You've certainly seen that, you know, ETFs are definitely an investment vehicle of choice for all kinds of investor groups. And in fixed income, investors are starting to have a lot more choice and precision in terms of the type of fixed income ETFs out there. So, you know, just like our firm, you know, we have 27 ETFs now, and we've been in business around 4 years, just trying to give investors unique exposures across different asset classes that they might understand, like corporates, high yield, private credit, treasuries, emerging markets. But we've tried to package them in a unique way, and as our name indicates, bond blocks, they can be building blocks for investors' portfolios.
At this point now, also, you talk about the steepening of the yield curve. A lot of people have been going for shorter term bonds, but a lot of folks are looking for duration too, right?
Mm-hmm. We're certainly seeing that. We're seeing that with, for example, our BBB corporate fund. We have 3 BBB corporate funds, a short, intermediate, and a long fund in BBB corporates, and we've definitely seen increased demand for our intermediate BBB fund. That ticker is BBBI. We have 8 Treasury funds across the curve, starting with a 6-month duration, going out to 20 years in duration. And we've definitely seen a lot of customers move out in terms of the duration that they have in those funds as well.
So at this point now, what am I missing when we think about the big picture on how people should be investing? Because is this year really different than the last 3 years? Because the last 3 years people were looking, it was climbing the wall of worry, but they killed it in equities. I mean, they had double-digit percentage gains 3 years in a row. How will this year be different?
Well, in fixed income, you haven't had those returns of equities, but you've had very strong returns with less volatility. I mean, we are seeing, at least 10 of our funds returned in excess of 7% last year, up to our emerging markets fund. XEMD was like 13.5% in return, and that has like a shorter duration than most emerging markets funds out there, so it was with less risk that we achieved that return. And so what you're going to continue to see this year is, you have continued economic resilience here in the U.S. economy. You have corporate fundamentals remain strong. So we're still really focused on talking with our clients about the benefits that they can experience in terms of increasing their exposure to corporate bond sectors, both investment grade and high yield, and on the public and the private side.
And I know you think that this is obviously an integral way for folks, they must have this in their portfolio. Your top actionable ideas: emerging markets, BBB investment grade, CCC high yield corporates, BB high yield corporates, private credit. Touch on any of those right now. I mean, let's blow through those a bit, because people like to really write these down and take the actionable advice.
Right. So in emerging markets, for us, it's XEMD is the ticker, and it's a shorter duration or shorter average maturity fund that focuses on U.S. Or that focuses on emerging market sovereign debt, and it's got an attractive yield. It's had very attractive performance. You're seeing benefits from emerging market economies are doing well within the context of global resilient economic conditions. So that's one of our top ideas. Also, BBB corporates, we have a fund for that in terms of 3 different BBB funds. Our intermediate fund, BBBI, is the top of our recommended list this year, because we like its intermediate duration and the yield advantage, the low volatility, the strong corporate fundamentals that we see that will benefit BBB corporate bonds. And then in high yield, we have a wide variety of different high yield products, but I would call out our BB rated fund. That is, we like to call it the plus and core plus for investors, because it's something that can enable investors to enhance their returns without a lot of additional risk. The coupon income there is elevated, still elevated, something that's great for investors. And then going all the way down to the lower credit quality of our CCC fund, there, 11 and mid 11% type yields, still strong corporate fundamentals, low expected defaults for public high yield companies. So we think that fund is poised to do well from a total return perspective. And then finally, private credit. We have a private credit CLO ETF, PCMM, and that one focuses on middle market companies. And just as we're seeing the resilience in public markets, both investment grade and high yield, we're seeing the same type of resilience in the middle market lending market. And so that's also one of our top picks.
Yeah, I know. You've grown. You've really grown. 7 billion assets under management, continuing to grow, investor demand for your ETFs. Joanne Bianco, great to speak with you today, and thank you for going through some of those ETFs to watch. We really appreciate it. Joanne Bianco, investment strategist, client portfolio manager, Bond Blocks ETFs. Thank you. Still ahead, our panel is ready to talk all about the big bank earnings that we've had this week. Now, there are more to come, but what do we need to focus on? How are the financials looking for 2026? We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Want to dive into the bank earnings that we got thus far. There's more to come even tomorrow. Some of the regional banks will be coming in. McCrae Sykes, portfolio manager, Gabelli Fund. So Mac will join us. And Matt Maley, managing director, chief market strategist, Miller Tabak and Company, and founder of the Maley Report. Great to see you both. So Mac, we've heard from JP Morgan, Bank of America, Citi, Goldman, Morgan Stanley, and BlackRock, just to name a few. What is your takeaway thus far?
Well, I thought the earnings have been pretty good so far. The outlook's consistent, I think, for the most part in terms of expectations. Maybe some puts or takes. Investment banking, a little disappointment we saw from JP Morgan. We did see some negative reactions earlier in the week, but some of that technical, just rotation, the run up ahead of earnings, no incremental kind of expectations above guidance. So, but today we had great results from Morgan and Goldman, good, confident outlooks. So I think the banking sector is in great shape for returns in 26.
You know, Matt Maley, as we look through, I mean, it was funny because we saw investment banking doing better at Goldman and Morgan Stanley, less so at JP Morgan, Bank of America. But Bank of America, you had Moynihan talking about an economy doing well and a resilient consumer. What were your takeaways, Matt Maley, from the group?
Yeah, I think what Matt can say is right about what we saw from JP Morgan, Bank of America. I mean, I think it was more technical in nature. It's very strange how whenever these stocks rally into their earnings, they always sell off, whether they report bad earnings or even when they report good earnings. And that's what we seem to see. And of course, this issue of the credit card interest rates also played a role there. So I actually think those are providing some good opportunity in those names. And then, of course, these numbers we got today from Goldman Sachs, Morgan Stanley, those investment banking numbers there, which were good, despite the fact that we had the government shutdown, which a lot of people thought would create some problems. And then, of course, their trading revenue, which is positive, but that can be, flighty. That can change on a dime. But with the wealth management numbers, that gave them a little bit more solidarity looking forward. So, this is something that's looking very good for this group, especially when people are looking for groups to rotate into.
We just had on Stephen Nigro, who was all about M&A activity and the pipeline, and we heard that even today from the banks. There's a lot of excitement about deal making going forward. Mac McRae, you actually like Wells Fargo, which wasn't necessarily the hottest of the group. This is your top pick. Why?
Right. So, a few years ago, they were in the penalty box from the regulatory issues. They've emerged from that, at a more simplified, clean platform. They're making strides there, and then just got the asset cap removed last year. So they're going to be optimizing their capital, gives them the ability to grow, be more competitive. And they're also managing their costs very well. So tailwinds in NAI, similar to the other major banks, Bank of America, et cetera. Great operational control, and then putting capital to work where they can take an incremental wallet share. So we continue to see good earnings growth over the next year. Just increase their target or their ROTCE. And so again, this is a nice story within the banking sector, but some idiosyncratic components that to make Wells Fargo more attractive.
Look, Wells Fargo right now at $89. The high was 97 and change. Mac, what kind of price target do you have, or where do you think it could be headed, Mac?
Well, it's trading around 11 times next year's earnings. We could see the stock 100 plus in the next year or so. Again, I think the fundamental backdrop for owning these big banks is terrific. GDP, loan growth, deregulation, and certainly the steep yield curve. So, you can pick a target, a couple of dollars, whatever it may be, but this is a multi-year story of execution, and they're well on their way to doing great.
All right, and Matt Maley, what's your favorite name in the banking sector here?
Well, it's always hard to go against J.P. Morgan. That's the pinnacle of the business. But I think Bank of America looks interesting too, especially after their recent pullback. But also look tomorrow. Some of these regional bank names, PNC Financial reports tomorrow. That's a stock that did come down with this credit card issue earlier this week. That could create some real good opportunities as well. Remember, the KBE bank ETF is only now breaking above its highs from 2007. So it could have a lot of upside here in a lot of different names.
We have tomorrow, we have PNC, State Street, M&T Bank, just to name a few. What do we think about the 10% cap idea on the credit cards? Mac, what are your thoughts on that? Does that go through? What do you think? It's not the first time we heard some sort of cap on the credit card interest rates.
Yeah, I think it's pretty complicated, ramifications for the overall industry. I think it's good to see if we can find some relief from certain consumers that may need it. Maybe a draconian, component of just capping at 10% certainly doesn't seem reasonable in terms of some of the dynamics around the insurance of credit and so on, and availability if that were to be the case. So I think it's a work in progress. It's nice that there's attention to the space and trying to help consumers, and I think a lot of the big banks have the leadership to kind of work with the government as well to sort of figure out stuff as we go into trying to improve affordability for the consumer and also make sure there's enough credit as well.
Where do we think the 10-year is really headed, Matt Maley, quickly?
Well, I must admit, I'm worried about what's going on with these budget deficits, not just here, but in other countries like Japan. You see where interest rates are moving up there. So I think that the long-term interest rates are going to move up here, no matter what happens with the Fed and short-term interest rates. But that, it makes the yield curve more even steeper, and actually that can help, the earnings for the banks as well, or net interest margins. So it's a two-edged sword. If they go up too much, obviously that's going to create some problems for the economy. So we need to be careful on that front. But I am still worried about these budget deficits. I think they're finally starting to have an impact on the marketplace.
Good to see both Matt Maley and Max Sykes. Thank you. And thank you, friends, for being with me right here on the floor of the New York Stock Exchange at 9 a.m. and 2 p.m. here on Schwab Network. I'm Nicole Petalides. Keep it here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. Chip names are hitting all new time highs, fueled by Taiwan Semi. We'll have a full breakdown of the earnings and how long the chip rally can last. Our guests will share their top picks for 2026 and discuss the role of the Fed as President Trump looks at the central bank to lower rates. And Coinbase throwing a wrench into the crypto world today, pulling its support for a regulation bill ahead of a debate in Congress. We'll examine the options data around the stock today. Marley, take us through what you're watching for today.
You just hinted at one of them, Sam. Taiwan Semi shares hit a new record high after posting a 35% increase in fourth quarter profit. The company also says its capital expenditures will be between $52 and $56 billion this year. That's a 20+% increase from last year. Other chip stocks rallied in sympathy following that report. Goldman Sachs also seeing a strong move to the upside following its fourth quarter report as well. Despite a miss on revenue after offloading its Apple Card loan portfolio, profits easily exceeded expectations, rising 12% year over year. Also a good day for Morgan Stanley, one of the top performers in the S&P 500 today,
as it beat on both the top and bottom lines. Investment banking was a standout metric here, with increased M&A activity across all regions driving that one. We'll break down all of those earnings and more of our top stories today. But before we get to that, let's check in with the markets as we near the end of the trading day. The S&P 500 still up 1/3%, 69.50.61 right now. The Nasdaq trading close to 0.5% higher, 25,579. On the Dow, we're more than 319 points higher, 49,469. And the Russell 2000 at 2681, that's up more than 1%. For the 10-year, we are at 416, just slightly higher. The U.S. dollar also a bit higher as well, 99.13. For gold, we are trading slightly lower, but near those record highs still at 46.1760 a troy ounce. Crude oil has fallen pretty substantially today. We're down almost 5% at 58.92 a barrel. And Bitcoin also falling down about 2.5% to 95,605 after getting close to 98,000 earlier. Sam, I'd love to know what stories caught your eye today on the floor of the NYSE. You know, there was a lot to choose from.
Absolutely, and just late in the day, obviously, with this Taiwan trade deal as well, no doubt that's going to help TSMC, but that's also been helping tech regain its footings with those earnings. Nvidia shares are higher. The Dutch chip equipment maker ASML hitting a record today as well. Broadcom has been rallying, an upgrade over at Wells Fargo also helping that stock. AMD shares have been up over 6%. Memory names also rallying hard. SanDisk, Seagate, Micron and Western Digital, but it's not exactly a tide that's lifting all boats. Apple has been lower in the session today. Also watching the geopolitical risk premium being priced out of the market right now. Oil is lower after President Trump eased some of the speculation in the market around an imminent attack on Iran. We're also seeing metals reversing course after that record-breaking rally we saw earlier this week. There had been a flight to safety on some of those geopolitical uncertainties in the previous trading sessions. And we've got a ton of Fed speak hitting the tape today as well. Goolsbee saying inflation could come roaring back if you take away Fed independence. Schmid saying inflation is too hot and prefers to keep rates unchanged where they are and thinks cuts won't fix structural labor stresses. And Bostic now saying he expects inflation pressures to continue and that the government shutdown could distort data until April or May. But for now, Marley, I'll send things back over to you and Jenny in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn joining us here in our Chicago headquarters to talk about some of these top stories that we are focused on. Let's kick things off with Taiwan Semi and this impressive record-breaking move to the upside we're seeing, and also bringing a lot of the chip stocks along with it.
I mean, absolutely, especially because, of course, think of Taiwan Semiconductor as really the powerhouse of the chip manufacturing business. We know that right now they do manufacture the chips behind like Apple, Nvidia, AMD, Qualcomm, etc. So think that they are basically the world's most high-tech bakery and that companies are coming with these recipes. They are then providing the next step of the AI story. But they do still control right now an estimated 70 to 72% of the world's outsourced semiconductor foundry manufacturing. That's expected to rise to about 73% this year per the IDC. So just gives a good, I think, read on really how important this company is to the broader supply chain of AI. But overall, demand for AI and high-performance computing chips is continuing to overpower supply, leading to record profits, aggressive investment plans, and advanced node dominance. And we're also seeing multi-year technology leads for this company. Net profit surged 35%, hitting $16 billion, beating expectations, also marking 8 consecutive quarters of profit growth. We saw revenue climb about 20.5% year over year, also easily topping forecasts. And now AI and HPC chips do account for roughly 55% of their quarterly sales. And we know that's expected to advance to around mid to high 50% from a compound annual growth rate through at least 2029. And so, I mean, guidance was even stronger. We did see that they, continued to give upwards of what the street had been expecting, guiding for first quarter revenues to be around 38% growth at the midpoint from last year. Full year revenue also is expected to grow about 30%, also easily surpassing forecasts. And they reaffirmed their $165 billion investment in Arizona, with plans suggesting around 5+ fabs currently in development. And you hear a lot of these metrics about, the fabs, the nanometer and some of the overall components of those intricacies. And I was just curious, like, how much a 3 nanometer chip costs to make. And it's estimated $20,000. So it is good that they have partnerships with these companies that are, outflowing so much cash to this part of their business, because it's beneficial to Taiwan Semi. And you can see that from a green day across the board, not really wavering at all in today's session.
And interestingly enough, Taiwan Semi is showing the smallest upside move of some of these other chip stocks. We're up more than 5% for Taiwan Semi. Like I said, they did hit a new record high following this report, but we're also seeing Western Digital, Applied Materials, SanDisk, a big move. KLA Corp also has had some good analyst coverage as well, but up more than 8% following that. Also saw some good moves in financials today when we got reports from Goldman Sachs, Morgan Stanley, BlackRock today. They're all moving, up about 5 or north of 5% higher.
Yeah, I mean, Morgan Stanley, Goldman Sachs, new highs today. Now, BlackRock still about 5% below its all-time high, which it has not seen since October, but all three easily beat earnings estimates, but Goldman's beat was the largest. BlackRock's was strong, but dragged by some of these gap income declines.
Perfect
Morgan
timing.
Stanley, though, delivering historically high full-year performance. So all actually benefited from different things. So to break that down, Morgan Stanley, saw its fourth quarter revenues rise year over year. Earnings were for the full year the highest in the firm's history. Their wealth management does remain really that growth engine. It accounts for more than half their revenue. That rose 13%. And we saw investment banking surge 47% year over year on some IPO and M&A strength they highlighted, while institutional securities are returning to growth with around $7.9 billion in fourth quarter revenue. Goldman Sachs, on the other hand, saw profits increase 12%. Revenue, though, contracted about 3%. That was in part due to, though, this one-time reduction related to the bank's agreement to unload its Apple credit card program to JP Morgan Chase. So while that dragged on JP Morgan...
Let me see if I can get this right, baby. We're looking at a quad bottom, baby, with an inverse head and shoulders. I just got back from getting paper towels, and every day goes by, ain't getting any younger. Here we go. Ladies and gentlemen, Washboardjim here, calling out the next trade. He's looking at the options, the 69.60s. They're right now at $2.10. These are for the lotto. These are called on the same day. $2.10. Just don't know how he does it. He comes in here like he owns the fucking joint. Every single time. Oh! There's the quad bottom, just broke. Now we got the triple bottom. Don't have a stroke. You beast, get in there. Fudge. You have to be so hard on me. I just got back. There's the triple bottom there. Perfect. $1.80. 69.60s. The crowd's going wild here at the sports arena. Jim needs to clean his house, start fresh. Right there. Go. Break it. Come on. You're not supposed to do this. Not on the falling wedge. Such a steep drop. I gotta see what happens out of this one. Oh, there it goes. I think I need to stop out. So I'm gonna hold these forever. A bit longer. Ooh. Getting a little nervous. Do you hear something? Oh. Damon, you know you're on mic? He's good, ain't he? Damon, you got your ears on? Paging Damon. He does now. It reminds me of that video I did. Charlie Sheen on stocks. Hot mic. Come on now, I need a reversal here. This ain't looking too good for a washboard. I hate doing this. Come back from a very productive day. Yeah. This market seems like it just wants to have a correction. Nothing can hold it up. Toot toot. What the heck am I doing, man? More lows.
Always talks about that we can't really observe, we only know after the fact, that maybe that should be a little bit higher. So, I think if we do not have rates kind of trickle down from here, at least on the Fed funds, it's going to be for really good economic reasons, which quite frankly, I mean, that's a trade I think anyone would be willing to make, that the economy is in a place that it can sustain a higher level of rates rather than needing to cut rates to boost the economy. So I think that's the main distinction, is that if we don't get rates lower from here and those expectations aren't met, it's for really good economic reasons as opposed to the other side of that.
So if that were to come to pass, does that change your stance on small and mid caps? I know I see here that you favor them. They're strategic favorites for you, but they tend to favor this lowering interest rate environment. Even if we don't see that, if the Fed is done, as you say, what makes this cycle different than past false starts where we thought it was going to be the time for small and mids to shine?
Well, look, we have to, looking back, we've had 175 basis points of Fed cuts from the high, right? So there's been a significant lowering of interest rates over the last 18 months. And that overall level of rates, when you look at, the 10-year yield, in that 4.15 range where we sit now, is probably about fair, with what's in the price, and even with, the Fed, only cutting one more time. And so, those level of rates, I think, are something that small and mid-cap companies can now digest, in their business models, because, as I mentioned earlier, you've seen a significant increase in, earnings growth expectations from that part of the market. And you also have just a lot of consumer strength that is flowing through to GDP numbers and retail sales. And so I think rates, at least on the kind of 10-year side of things, which may be a little more impactful for the small and mid-cap space, are at a level where they can absorb that. And so that I think is an environment that we haven't had sustained for a while. And so that doesn't change my thesis, because for that to come to pass would be even stronger, economic growth and an even more healthy consumer, which would be an even stronger boost, I believe, to kind of that smaller cap cyclical side of the trade that I speak of.
Great stuff, Mike. We really appreciate your time in joining us today and breaking down your thoughts on these markets. Mike Dixon there, Head of Research over at Horizon. Coming up next, we'll dive into TSMC's earnings. The stock rallying to a new all-time high after the latest report, and we'll discuss how long the chip rally can last. Next on the Schwab Network.
Looking for a rebound. Man, nothing held. All the good ones. Took off my shoes.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden in Chicago alongside Sam Vadas at the New York Stock Exchange. Taking a closer look at today's rally in the tech sector, we saw ASML's market cap rise above the $500 billion mark today, helped by Taiwan Semi's blowout earnings. ASML is Europe's most valuable public company and just the third European company to reach a $500 billion valuation. It joins LVMH and Novo Nordisk, although important to note both of those companies have since fallen significantly since hitting that milestone. Let's take a look at some of the other winners in this rally today. Some of the chip stocks we're seeing: KLA Corp more than 8% higher, SanDisk in the memory space more than 6% higher, Applied Materials again 6% higher, Western Digital close to 5%, Supermicro up close to 4%, and ASML, of course, up close to 6%. But much of this boost supplied by Taiwan Semi and the earnings that they posted overnight. So I want to bring Sam back into the conversation. Welcome in our next guest. Joining us is Corey Johnson, Chief Market Strategist at Epistrophe Capital Research. I'm hoping we have Corey with us. Corey, can you hear us?
I can hear you. Can you hear me?
Yes, we can. Wonderful. I'd love to get your key takeaways from the earnings report that we got today. And also, do you think perhaps we can put this AI bubble conversation to rest for a bit?
Well, what we see is the participants in the bubble, and maybe the most important participant, saying this thing is going to go on for a long time and they're going to spend money to make sure that this happens. At Epistrophe, we cover the 50 most important companies in technology, and so I get to say that a lot. I'm used to saying that, but I have to say that you can make the argument that Taiwan Semiconductor is the singular most important company in all of technology. You can also make the same argument, for that matter, of ASML, but without these two companies, we wouldn't have AI, we wouldn't have the boom that we're having here, and we wouldn't have the technological sort of creation that's happening both technologically and economically, and yes, for investors in the marketplace.
So if we break down the numbers, Corey, obviously we got that 35% as far as the profit is concerned. I mean, that record revenue, it was the capex that caught a lot of attention today as well, with that range of 52 to 56 billion compared to the 46 billion estimates. I mean, what was the most important number that we heard from that company when they reported?
I would say the capex, except that all these things go together, right? The fact that we got such amazing gross margins, 62.3% margins, are just fantastic for this company. I mean, look at the revenue number of $33 billion. This is a company that did $12 billion in the fourth quarter just in December 2020. I mean, the notion that in December 2020, they could somehow add, another 21 billion to fourth quarter revenues in a few years, it's just an amazing thing. And I think it shows you that even as big as that is, the company says it's going to get bigger by reference of the capex number, but also telling us that the gross margins are going to continue to stay as high as they are, which means that they are figuring some things out technologically that will let them expand into 3 nanometer and even into 2 nanometer, which normally when you move into those more and more difficult processes, whatever they are, going back decades, that usually means a decline in gross margins until they build up the kind of the efficiency of the process as well as fill those factories. They say that's not an issue right here, that they are going to power ahead with high gross margins, which means high utilization and a great success in terms of technological difficulty of these unimaginable things of the past.
So, Corey, you bring up the advanced chips. They're now, I think, according to the report, 77% of their overall wafer revenue. How big of a competitive moat does that give TSMC versus other foundries?
Oh, it's such a great question, because we got news last week that Intel is going to be out with their 18A process, which kind of competes with the 2 nanometer process. And Intel's doing it only for their own chips at this point. But Intel has struggled so mightily. Intel once the leader in technology in terms of chip manufacturing at scale. The notion that Intel's going to have some chips out there shows there is a little bit of competition finally for Taiwan Semi. Now, the market takes for granted that Taiwan Semi is going to do what it says. The market does not take for granted that Intel will. I think that's why you've seen some speculation in the share price of Intel with the notion that, hey, maybe they finally figured some things out. We will see. Perhaps they will, what's the expression? Chuck a wobbly in the market? Sam, what you said that with the last guest, and I was really confused about chucking a wobbly. I learned so much on this show, but I have no idea what chucking a chuck a wobbly? What is that?
I was laughing with the producer in the break about that, going, did you guys know what I meant? Look, to translate,
I assume it's
like
cricket?
throwing a tantrum. You can, in cricket, in any sport, throw a tantrum. But then I also rephrased it as throwing the toys out of the pram, which I also realised was extremely Australian as well. So here we are.
It's too late. The wobbly was out of the bag.
That's right. But look, the guest understood where I was going with that. Hey, look, I hear what you're saying about the competition. Maybe it's a good thing, though, Corey, because they are facing a capacity crunch. I mean, we've heard about that. We've heard about NVIDIA reportedly asking TSMC, hey, let's put the pedal to the metal for these H200s. Can we spare up a bit of capacity to get those to China? But I also wanted to get your thoughts on CC Wei's comments about being nervous about whether AI demand was real or not. And I don't mean to speculate, because I don't like to do that, but would it have been a different outcome if, say, Jensen Huang had said that?
No, I think in both cases you have CEOs who have been through, in fact, these two have been through it together for decades now, and they've got enough control of their companies, enough humility. Humility is not the right word in both cases, but they've got enough notion that things can change and that they need to adapt their companies to it. So when they're placing all these bets into one place, they've been through this before. They've seen it work out, and they've seen things not work out, and it'd be crazy not to be concerned about it. But I think you can see that both companies are clearly putting their chips on the table, and they're really expect that this is what's going to happen. And every indication they have is that is indeed what's going to happen, that we're going to see continued fantastic growth of AI. And you know, and all hands lighten the load when it comes to whether we'll get competition, and we'll have Intel helping out, and we'll have TSMC helping out, and everybody making it. Look, if semiconductors are going to be a good thing, if AI is going to be a good thing, we're going to need lots of companies to make those things. I'll also say that it's really interesting to see that these increased smaller wafers, right? These new kinds of chips will use less power. We've been talking so much about the need for more power for data centers based on kind of the trailing notion of how much power it takes to light up these data centers. If these chips use less power, it will in some way lessen the power load on future demand of data centers. And so we might actually get to the place that we want to get to with lots of AI capacity without the need for as much power as maybe being envisioned if the chips, the gate-all-around technology that both TSMC is talking about and Intel's talking about, which will create more compute, using less power, creating less heat. NVIDIA's talked about the same. That's an exciting thing, because it really does mean that this growth will continue at a very fast pace in the world of AI and data centers.
And other things that were flagged, Corey, were concerns about memory shortages and higher prices. We saw a lot of the memory names moving to the upside on that commentary, as well as tariffs being a potential risk for the company. How much concern do you have any of those potential headwinds?
Boy, this company is so interesting, right? You can talk about the geopolitical importance of Taiwan Semi forever. And I think it's really interesting that the geopolitical risk, right, the risk of China starting a war that is a global problem, forget how widely it spills out. If China tries to capture Taiwan and starts a war doing so, we've seen all kinds of saber rattling and intentions from the leadership in China that they want to do that. If Taiwan Semiconductor expands in Japan, in Dresden, in Arizona, which they are certainly doing, in some way it lessens the geopolitical moat and the importance of Taiwan as the sole source. So it might be better for the world to have other sources of high-end semiconductors, and yet one wonders, does that actually raise the risk of a war over the Taiwan Straits? It's really worrisome. It's arguably the greatest risk in the world right now of something really bad that could happen, and yet what we see from a quarterly earnings report and a CapEx number from Taiwan Semiconductor directly affects the risk of what might happen in terms of a future war there.
Corey, we appreciate you being with us to talk Taiwan Semi on this record-breaking day for them. That's Corey Johnson, Chief Market Strategist at Epistrophe Capital Research. Coming up next, we've got Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at Coinbase after it pulled its support for a crypto regulation bill in Congress. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Crypto regulation hit a major roadblock today in the nation's capital. A Senate committee has postponed debate on the crypto regulation bill titled the Clarity Act after Coinbase CEO Brian Armstrong pulled support, saying the bill could weaken the Commodity Futures Trading Commission and restrict stablecoin rewards. The legislation is meant to define how crypto is regulated in the U.S., but without Coinbase's backing, its path forward is more uncertain. It's now time for Options Corner. Of course, Rick Ducat joining us, our lead market technician, to take a closer look at Coinbase, some of the moves it's making in the wake of pulling its support for the Clarity Act here. And we are seeing a pretty significant move to the downside, but I don't even have to ask which one is Coinbase without knowing, because we know this is a volatile stock. I mean, you can clearly see the volatility as you look at it more broadly against the market.
Yes, and a more difficult day today as well, as this bill kind of met its demise right at the finish line. And the sticking point is these stablecoin rewards. Basically, it would be they could pay customers a yield for keeping stablecoin holdings at their firm. So basically, like how if you keep cash at a bank, you could get interest. And that is the big thing here, because if they were to be able to do that, that would be a pretty bad situation for community and regional banks. Especially the big banks could make their own stable coins to compete, but the smaller banks could have a pretty tough time. The Independent Community Bankers of America did an analysis last month that said permitting stablecoin interest could reduce bank deposits of community banks by $1.3 trillion and lending by $850. So potentially big ramifications there for this bill. But we can also see the big banks showing some strength recently here, while Coinbase kind of wanes here. Bitcoin down as well today, 2.3%, but it's Bitcoin, so that's not really all that unusual anyway.
And, you know, as we take a look at Coinbase, you know, a bit hard sort of to really compare it against anything, but you did mention the big banks trying to become players in this space. But as we look at the technical setup here, you know, walk us through what it looks like, especially with, you know, we're seeing, I think, more than 6%, 6.5% move to the downside on Coinbase today.
Right, so what we see here is that we did hit these highs, 444.65, but from there we trended lower. Our next set of highs, we did fill the gap that formed right here after earnings, but not much progress beyond that level. And from there, a rather rapid slide, our blue trend line there, did find some stabilization here near 232. If you were to backtrack, you would see that would be an important area back here. It was low points after a gap and also a notable high point. So we did hold on, or rather the bulls did hold on at that point here. Now this short-term upward trend line in white is in peril already here. Very short-lived, but potentially breaking lower below this point. It seemed like there was some optimism about this, the prospects for this bill going forward. So this could be a very noteworthy supportive area to watch going forward. We can see that our moving averages, we have a confluence here of our two shorter term moving averages near about 246, lining up pretty closely with our trend line, so that could be now a resistance area to watch out for. RSI, our measure of momentum, shows some interruption here, failure to hold on above that 50 midline, now also a breach below our green trend line. Finally, volume. Our volume profile study shows the heavy trading activity areas, one right here near about 260 and one right here near about 210 or so. Those are by far the most notable regions close by to current price activity.
It is interesting too, as you look at, the setup on this one. Coinbase moves is pretty well correlated with Bitcoin's. When you marked that significant move to the downside there with that blue line, that was also when we started to see that crypto crash fall off in terms of Bitcoin prices. But as far as options action that we're seeing on Coinbase, I'm not sure if Coinbase is a heavily traded options name usually. I guess question one is it? And two, is it being traded more heavily now in the wake of pulling its support?
It's certainly on the more active side. Total volume was about 337,000 options traded. Sizzle was 1.75, so elevated activity, but still a notable name here. Interestingly, 68% today were puts, so usually it's oftentimes more skewed toward the call side here. Most active month by far, January 16th for both volume and open interest. 76% of all options trades today were in that January 16th expiration for tomorrow, but the next most active month would be March and then February here in terms of the open interest. So it'll be a pretty interesting situation once this big open interest month reaches its conclusion and we have kind of a fresher slate to look at.
Yeah, certainly, and they haven't confirmed their earnings date yet either, so that could come into play here as well. But Rick, thank you for being with us to break down Coinbase and some of the options action that we saw on it today. I do want to check in with Sam, though, and find out who she'll be talking about for overlooked stocks today.
Right, Dawn Tillers has his eye on quantum computing after an upgrade from Rosenblatt Securities. He'll break down the news about it and what's behind the call and what you need to know about the stock coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Well, not too many trades today. No.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
First day, so...
Sometimes,
Next.
Try it again?
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Vardis, live from the floor of the New York Stock Exchange. Quantum computing and Rigetti both getting positive analyst calls from Rosenblatt Securities today. That is the subject of today's overlooked stock. So I'm joined by George Siller, Senior Markets Correspondent. So what went into these calls by Rosenblatt? Because I've seen they've initiated coverage of both names. Tell us why, George.
Yeah. Well, this is interesting. I think quantum computing is a technology we have to certainly consider as disruptive going forward. Everything from it being largely experimental in many regards to essentially, currently more impractical or improbable, but essentially we're seeing the divergence from classical computing and quantum computing, which is essentially more rapid in terms of scalability. So that's, again, the theme that's been going on behind the scenes with many of these companies that are sort of up-and-coming names. That includes, QUBT or quantum computing, Rigetti computing as well. Some of the larger players in this technology stack include names we've heard of, Google and IBM, so that's something to be mindful of. I think if you look at some of these names since October, including QUBT, it's down about 50%. But one of the things that's coming about is evolution of this technology associated with things like random number generation, data authentication, cryptographic technologies, and also data encryption, which are again part of this whole concept of high performance computing, artificial intelligence, but also cryptocurrencies. Now Rosenblatt is looking at some of these names, and they actually brought forth a price target of $22 and a buy rating on QUBT. They actually see the company as a legitimate business associated with photonics and computing, as well as system security in optical communications, and they also upgraded Rigetti as well with a $40 price target. But focusing on QUBT, one of the things they did talk about is they see the assets themselves as valuable going forward. And this is important because if you look at sales last year for Quantum, they only had about 500,000 or 500,000 in sales. Now they're estimated for this whole fiscal year 800,000, and next year around $2.8 million. But irrespective of that, the stock is still trading around $2.8 billion in equity, so it's trading at 100 times next year's sales. So
I don't know about
this. More of a value aspect in the assets versus more income generation going forward because they're still expected to lose money. But the other thing I noticed is if you look at the reported cash on the balance sheet as of last quarter, Q3, they had about $550 million, and Rosenblatt brought forth the cash now on a dynamic basis since last reported earnings at $1.6 billion, which suggests to me that in the last quarter, or at least since they last reported earnings, they've issued an additional $1.1 billion in stock, and that's helped showing up the cash position, which also may explain why the stock is down, at least since October, by about half.
Yeah, I was going to say, I was just looking at a chart of both of these names, Rigetti and also Qubit, and they have come off quite a bit since October and then sort of been trading sideways, you could say, since then. Yes. I mean, what's the story here? Because I know for most of 2025 it was a case of, a lot of investors sort of pumping capital into these companies, on the thinking here that, this is going to be some sort of revolutionary technology that's obviously going to change our lives. And, obviously we got that scare. I think it was around this time last year when sort of NVIDIA CEO Jensen Huang came out and was like, oh, hold on a second, you're a bit ahead of your time. And then he sort of turned and changed his mind on that. But, I mean, what's the story for these guys? Because as you say, it really comes down to, how much money they're making, the commercial aspect and the licenses here.
Mm-hmm. Well, I think commercialization of this technology will eventually evolve. The question is time, preference, and deployment. That's essentially the question. You have to consider there's a lot of money moving into advanced technologies, whether it's high-performance computing or quantum computing. The challenge is deciphering those technologies that are currently yielding, positive cash flows versus not. Quantum computing is essentially largely experimental still, but it's ongoing in terms of R&D. Lots of money is being deployed in R&D. The challenge is trying to decipher the real names from those that are the fly-by-night companies. I'm not suggesting Qubit is one of these names, but there's only 44 employees of this business, market cap at 2.8 billion, sales last year at 500,000. Again, so these are things you have to consider as an investor, not necessarily a trader, because these are trading vehicles. There's no doubt there's a lot of volatility. There's a lot of hype. Retail gets latched onto these themes, and they take off.
5 more minutes.
Stock over the last 5 years, it was a sub $1 stock.
Yo.
It ramped up to $24 last year. So again,
The market will start getting ready
the
again.
challenge is right now, and this is why the stock.
It's just acting very strange. Last year I knew exactly what we were going to do. This year I'm kind of going, I don't know, man. I can't trust these breakouts. Not yet.
Target based on that underwriting effect. So they are raising cash. They have $1.6 billion in cash on $2.8 billion in equity. If you look at the cash burn last year, about $68 million on 500,000 in sales. So you do the math there. It's a cash burning machine, but they did raise equity, so there may be some stabilization now in a trading range around that $12 area that it's at right now.
Gotcha. Understood. Thanks so much for that, Georgia, breaking down some of those names in the quantum computing space for us today. I'll send things back over to Marley in Chicago for now.
Thanks so much to Sam and George for that. We are nearing the end of our session, less than 5 minutes away. We'll be bringing in Kevin Green to break down the levels he's watching on the S&P 500, as well as today's action. Plus, we'll have JB Hunt's earnings out after the bell. Stay with us.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Two minutes.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We are back here in Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. We've just got a few minutes left in today's session, so let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the day. So KG, what levels are you looking at on the S&P 500 as we have come off the session's highs today?
Yeah, we're seeing a little bit of a pullback, especially in information technology, giving back around 1% or so here. We are trading at around the 69.40-ish area. I think that's going to be a key area for us to be able to hold. If you're looking at the options positioning, especially from this morning, the 69.30 was the negative gamma area that we kind of highlighted here. So we're about 10 points higher than that at this point in time here. We may have some pen risk at around 69.50. I mean, overall, it was a decent day. If you're looking at the market, we were able to recover some of the losses that we had yesterday. Just a little bit of a weaker close than what you would have liked to see. I'm not sure if that's because it's news driven or if it's just selling into the close, de-risking into the close. So overall, we're still kind of trading in this range. Can't break above that 7,000 level quite yet. But once again, if we have a green day today, which it looks like we are, I think you put that in the feather in the cap of the bulls that we might be able to try to sustain some of these losses and move higher here.
And KG, not a lot of time left before the bell, but as far as the technical setup for us hitting that 7,000 level, if we mark the green day today, do you see that in the near term?
Yeah, I mean, you could look at a situation where we hit 7,000 and then actually we fade pretty aggressively to the downside. I think that would be pretty much the setup that I'm looking for. Maybe a look above and fail, if you will. It's a milestone number.
All right. Well, one of them kind of days. Slow. I didn't even want to take a lotto at the end of the day. Just kind of sideways, and then down. So, tomorrow's Friday. Wish everybody a great day. I'm going to do my homework. I got to get all my paperwork together. Clean, get ready for the beginning of the year. Move my paperwork and put new filing thing in. I mean, I keep track of everything. Almost everything. I'm trying to figure out all this Social Security stuff with my Medicare, and I'll probably end up making more than $108,000 this year, but that's my limit before I start paying more. I don't know, I might limit myself. Depends what kind of setups there are. If I had some not, I think what I missed out in 2025 was real good setups. I mean, I was in them, and there's some of them. I think I had a trade last year that was like $160,000 I'd have made in one day, because I would have made it if I'd have held them. But I got in trouble, and I bought so many of them. Then when I got green and clean and was up substantial to where I was happy, and to realize later it could have been up $167,000 more. There were $4,200 contracts. Have 60 of them. There'll be days like that this year. And I was kind of in a rhythm there last year. And then there for a bit, it was getting a little bit difficult. And then I got on a groove, and now I'm kind of just not wanting to overtrade. So that's the way it's going to be. I had two good trades today is all I needed. I'm done. So everybody have a good day.